Y'all even want to listen to this fuck ass intro today? Do I even play this? Like, do you even want to hear this? do. Ah! Yo, 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 yo. What the fuck is good? How y'all feeling? How y'all doing? How y'all living? Welcome back to the stream. It's a weird day. I'm just gonna let you know that the market isn't the only thing going down. Also, my testosterone is, because it's day one of the hair pills on the same time that the market is just getting. That was a crazy start. I mean, at the same time, the market. Yeah, I mean, look, I don't even know what to say. Like, I'm smiling right now because I have a contractual obligation to come on the stream and smile at you guys. But I mean, let's I mean, yeah. Look, today's a crazy day. Today is a crazy day. And I honestly have a lot to say today. I have a lot to say today. Yeah, Luke, fix that title if you can. Let's change the title. There's no guest coming on today. It's just me. It was gonna be a guest. It's just gonna be me today. I have a lot to say today. I have a lot I want to get into today. And I mean, let's just before we do anything, even take roll call. Bitcoin 62K, ETH 1800, Solana is $78, Zcash is $214. Equities look like they want to fall off a cliff. Nvidia's 171 and holding on for dear fucking life. Silver's $72 and down 17% today. It's actually down more than Bitcoin today, if that was even possible. It's down significantly more than Bitcoin. Gold's down 4% today. Copper's down 3%. Platinum down 8%. Uranium down 8%. Altcoins are, bloodbath. Monero, Aerodrome, Pengu, Sui, Fartcoin, Uni, and Aave are all down 20%. Plasma, Arb, Jupiter, Tau, Axie Infinity, Cake, Zcash, and Say, Dogecoin, Litecoin, and Manto down 15%. Athena, Pump, Lighter, Monad, Bear, and BNB are all down 10% plus. So, before I even take roll call, I want to tell you that the market is not over today. Let me just let me be for real for a second. We'll troll, and I'm gonna crack some humor because it's kind of fun to crack humor when things are bad. But let me tell you a couple things. Number one, the market's not over. Number two, crypto isn't done. Number three, even if you were down a lot of money, your ability to make it as a trader is not invalidated. Number four, the only way you can lose is if you quit. Number five, I'm killing yourself in GTA, whatever, is never the answer and fundamentally guarantees that your bloodline cannot succeed, and neither can you. 6, it will always get better. 7, markets go up, markets go down, but markets fundamentally will go up again and you will get to experience it again. 7, 8 is there will be a new bubble at some point for risk assets, for emerging technology. We sit on the front lines of it, and at some point, whenever that comes, whether it's right now, whether it's tomorrow, whether it's next week, next month, next year, next decade, we'll be on the front lines of it. 9, there's a real world happening outside of your screen in the real world. Go walk around, go look around, go to the city, go down some weird streets. No matter how bad your portfolio is, somebody fucking has it worse, and it feels good to walk outside. Number 10 is you can close the computer and you can see a world outside of the screens. And number 11 is if you are feeling like quitting and the market is getting to you, you absolutely fucking should, because we are not going anywhere. All right, roll call. Nita, what's good? Caleb, my brother, what's good? Pre-rich intern, what's good? Coke Toshi, what's good? Everything's mad, what's good? Seth Rogen, what's good? Kevin, what's good? Sparky, what's good? Tulip King, Digimoney, Kai, Viblet, Starling, Rick Sanchez, Jackson Ray, Polka, Sparky, Rugger, Tom Brady, Live the Life TV, Coke Toshi, everyone, Rick Sanchez, Joey J, Mac D God, Zora, DJ Slumbo, Lucy, first time chatter. Any first time chatters in here? Migmas, welcome. Muddy Milk, welcome. Look, I guess just to level set with y'all, so we feel some like mutual pain here. Because what do I always say? If you fall off a cliff and die, it sucks, but it feels a little bit less bad if somebody else falls off and dies with you. I was gonna do guests today. Well, first I was gonna do a prediction market traders today, and then I was like, okay, we need to focus on the task at hand, and I want to listen to this MicroStrategy earnings call in an hour on the dot. And then second is I was going to bring on like a crypto guest, like maybe try to get a Flood, maybe try to get one of these guys on today. But the reality situation is I'm reading the timeline and everyone's in shambles. The equities guys are in shambles. Crypto guys are in shambles. Kobe and them are in shambles. The TA guys are like have quit TA. The fundamentals guys can't make sense of what's happening, and everyone's relatively in shambles. So I figured today should be a solo, and I got a lot. I just have a lot I want to get off my chest. Some speculation, some predictions, some thoughts, and I wanted to just do like a community on community stream. So we have an hour. I have a bunch of stuff to cover in an hour, and then in 1 hour, the world works in fucked ways sometimes. That Michael Saylor has to go on a fucking earnings call in front of the entire world, globally broadcasted, and talk about MicroStrategy and the state of their company today. He has to do it today in an hour in front of the world on national television, talk about the state of crypto today. So I don't think that they're, I mean, dude, the world can work in fuck ways sometimes. I mean, that's dark. They're making this fucking guy get out of bed and do this today. Bitcoin is at 63, 64, about 64K. And he has to go and talk about why they're down like $10 million in the last week. Luke, you're good. Go ahead. So do it quick though if you can, Luke. Yeah. The world works in fucked ways, and we are in a really tough spot with the market right now. And I'm just gonna say, I'll get to this in a minute, that I don't really think this is just going to be a crypto thing. I mean, this is potentially going to extend across other markets. And Luke, let me know if you're good, because I want to get into the stream. I have a lot to cover. So, you good? Okay, let's get into it. The first thing I want to say is I want to just gauge like the average age of our chat. Like who show fit? All right, let me show fit. The Gengar. Who in this chat was on crypto Twitter when December 2022 FTX collapsed? Who was here for that? Who was here for that? For FTX's collapse? First time watching, welcome, brother. Picked a good day for it. Okay, so like half. Half. T-cuts to ETH, yeah. CZ clipped that head straight up. Yeah, he fucking, that fucker, CZ did. CZ, we're sorry, you're not a scammer. Okay, like half. So let's just like start here. I don't know. I mean, I have a lot of stuff to cover. If you want to like skew me in a specific direction, I want to talk about where I think what's happened, where I think we are, compare it, do some analogies, then go forward looking. There is a lot, for some reason, I don't exactly know where this take originated, but there is a take in this basic collective belief that sentiment right now is worse than sentiment was when FTX collapsed in December of 2022. Because in December of 2022, people still believed in stock, or people still believed in crypto. And in this crash, 2026, people no longer believe in crypto. And I'm just going to tell you from first principles experience, from somebody that was there every second of the way on FTX. I was there the whole time. I was on spaces every single day, hosting about it, talking about it. I didn't have that much money, but I lost a lot of my net worth in whatever I had in FTX. Now, I didn't have the historical context for the space, where we have been, what previous, like I didn't know what I didn't know what 2019 felt like to compare to 2022. All I had was FTX. This is not true. I just like want to throw this out there that this is not true. Okay. FTX and what happened during FTX was quite literally 9/11 and the worst thing that could have ever happened to crypto. Like, to understand the analogy, we have to understand what FTX was, okay? The entire market had already imploded by the end of 2022. Everything had imploded. Everything was a scam. Everything was down only. The VCs that were fucking ripping all of our assets, buying our NFTs, pumping our coins, pumping Bitcoin, pumping these tokens, were completely tits over levered to the top, just like the DATs, 3AC. They completely blew up and they puked everything. Completely blew up, puked everything. 3AC puked everything in everyone's face. One of the biggest tokens, like the equivalent of, I don't know, like hype of this cycle is Luna. I don't know what's the equivalent of hype this cycle. One of the biggest tokens that, all the biggest names were publicly backing. One of the biggest wealth generators of this cycle, Luna, literally went to zero in one candle, bro. It went to $0 in a candle. And like in a singular daily candle, Luna went to zero in one candle. It'd be like, imagine Hyperliquid or imagine Solana just went to $1 right now. Like, what's the, like, let's see. Luna coin market cap. Bro, it's a $1. Is this the right chart? Let's go. Market cap. Okay, it wasn't. Bro, look at this. This is a Luna chart. Terra Luna. Okay, at the top, market cap $40 billion. $40 billion. Market cap of this coin. Let's go duplicate. I know I'm a normie for coin market cap, but hype. Current market cap. $8 billion. Current market cap of hype is $8 billion. Okay, let's look at Amazon real quick. Everyone's panicking. We're going to get to equities in a second because I have a Amazon. Yeah, off a cliff. We'll get to equities in a second. Hyperliquid right now is an $8 billion market cap, okay? Imagine Hyperliquid, but 5 times bigger, that went to zero in one candle. Think about this. Think about this for a second. It went to zero in one candle, bro. Luna went to zero in one candle. Like in 1 minute. It went to zero in 1 minute, okay? Which, as you can imagine, started this. It was also a algorithmic stablecoin, so people were using it to loop DeFi. People were borrowing against their on-chain assets. It's the size of Sol. Imagine you woke up right now and Sol was at $1. Okay, that kicked this whole thing off. So everyone is using UST as collateral. It's algorithmic stablecoin, and algorithmic stablecoin, which everyone is using as collateral to borrow against their assets and buy more, is backed by Luna. Backed by Terra, which goes to zero in one candle. In one daily candle goes to zero. Solana from $80 to zero. No bid, it's over. Which leads to this insane ricochet effect that basically every VC is tits levered, has massive exposure to this. It's interwoven with every single asset because it's like a huge DeFi protocol. It's UST is involved in every sector of crypto. Everything just gets destroyed. So all of these VCs, similar to the DATs, which were leveraged tits to the fucking moon, pumping our coins, are now destroyed. Forced sellers, forced liquidations across the board. Everything gets destroyed. So 3AC, the biggest VC, gets absolutely just blown up in everyone's faces. Okay? And the following effects of that, so basically the entire industry is a scam. The token everyone believed in has like caused utter mass chaos destruction to everything. Everyone that has any exposure to anything is getting fucking destroyed. And then the biggest exchange in crypto, the equivalent of 2022 to what's happening right now is Sol goes to $1 in one candle. And then Coinbase comes out and says, we're insolvent. Anyone that has any money on Coinbase, you don't have any money anymore. The biggest exchange in the world, FTX, comes out and says we are insolvent. Basically, comes out and says we're insolvent. Anyone that has any money in FTX, you don't have any money in FTX anymore. It's gone. The biggest, most viral, most populated, most used, most volume exchange comes out and says we don't have any money. If you have money on here, no, you don't, and you're probably never going to get it, and we're completely insolvent. That was FTX 2022. Okay. And so I didn't really know what was happening. I'm new to the space at this time. I go on Spaces and I do a live stream on Spaces because So I'm being told it wasn't the biggest. Well, it was fucking second. I go on Space, basically the biggest. I go on Spaces, and I'm like, what the fuck do we do? Like, what do we do? And Kobe joins the space. And Kobe comes on stage, and Kobe's still like, legend Kobe. And yeah, it wasn't the biggest exchange. My bad. Not the biggest exchange. But one of the biggest. It was the most viral in the US, though. It's the Miami Heat Arena was FTX Arena, Tom Brady commercials. It was the most like integrated in culture. Kobe comes on Spaces, and I'm like, I'm kind of cracking humor. Like, I didn't really understand what had happened at this time. And we can listen to it if you want. I'm down to listen to the space if you want. Kobe comes on Spaces, and he basically says, this might be it. Like, this might be it. This is the worst thing that's ever happened in crypto since Mt. Gox. I wasn't really conscious during Mt. Gox, and this is probably it. Like, I don't really know. He goes on Spaces in front of like 10,000 people and says, this might be it, bro. I'm gonna keep it a buck. This might be it. I don't really see a path. This might be it, is what he said. For 30 minutes, he's just like, yeah, I don't. And we're cracking humor and we're making jokes, and we're like, I was 19. I was 20 at the time. I didn't really know what was going on, and I wasn't really conscious. I didn't even have a pulse in crypto yet. But he comes on Spaces and basically says, yeah, this shit is over, big dog. Good luck. And that was the sentiment. Like, that was, bro, I mean, that was it. That was, we were down, and I'm going to get to the point in a second here. Just give me a second. I mean, look at this. This is FTX. I mean, we were already down like 70%. And then we just go, bam. Another 25% in a weekly candle. Another 25 after 70. All in all, bringing us down like 77% off ATH, okay? At current price, it's actually accelerating better than you think. 77. We're down about 50%, okay? Down about 50% right now. And so there's this like notion that everyone in crypto believed in crypto during FTX. Like, everyone believed in what we were doing. Like, bro, Bitcoin was 15K and there was no bid. And if you think there was no bid out on BTC, there was no bid on alts, okay? Everybody quit. Everybody that I knew and that I came into crypto with and that I was trading NFTs with and that I was in the space with and like the founders, everybody quit. Damn, I didn't even tweet the fucking stream. Am I tripping? I didn't even go live on, Jesus, I'm all over the place. I didn't even go live on fucking Twitter yet. They don't even know I'm live. Luke, you didn't use my title, bro. Everybody quit. Everybody quit. Everybody fucking quit. And they were done. And they said, fuck this shit, I'm done. Crypto's a scam. Everything in this place is a scam. This place sucks. Everybody I knew quit. Bro, you imagine this. I'm 20 years old, 21 years old maybe. I just dropped out of college. I've been out of college for a year and a half. I just quit my job. I have no money. I'm living at home. And the industry I just like went all in on was gone. My parents are like, what are you gonna do? My friends are laughing at me. All the biggest names in the space are capitulating. The only people that got any money out were buying fake Bahamas passports to scam money out of FTX. This was like the crypto Twitter for like a week became a broker to sell illegal passports from the Bahamas on Twitter so they could get money out of FTX. That's what Twitter was a broker to buy fake Bahamas passports for any price. To get any amount of money at FTX. Bro, I knew people that had millions and millions and bro, a lot of these companies were keeping their treasuries on FTX. It was done, bro. The space was fucking done. Everybody I knew quit. I'm sitting in my basement. I got like 5K in my bank account. I dropped out of college. I told everyone to go fuck themselves. I cut off all my friendships. And all the smartest people I know are just like leaving crypto Twitter. It was over, bro. Crypto was done. It was fucking over. Anyone that tells you that post FTX was optimistic is fucking lying. There was zero optimism. And so from December, Sailor tweet, what is it? Okay, we'll get to it. We're gonna watch the earnings call. From December 2022, when FTX blows up, until August 2023, when Friendtech launches, there was not a single thing that happened on crypto Twitter. Nothing. Nothing happened on CT at all. There was nothing, okay? It was so boring in the summer of 2023 that we were racing hamsters. Does anyone remember we were racing hamsters in 2023? Does anyone remember we were racing hamsters? Okay? And everybody was so angry that everything in crypto was a scam that we were racing hamsters, and the hamsters were a scam. They were recorded races. Those were a scam too. The hamsters were a scam. Even that was fake. Every single thing you knew about crypto was a scam. People said this industry fucking sucks. There's places that... Dude, people in YouTube chat are spamming 55K. What the fuck is wrong with you people, you fucking sickos? What's wrong with you? Talking about 55K on a YouTube channel. Suck my dick. Bro, everybody was so done and jaded with crypto that we started racing hamsters, and even the hamsters were a scam. They were pre-recorded races, dog. They were fucking pre-recorded races that were fake, and they were skimming money off the top with fake races. Even that was a scam. The fucking hamsters were a scam, bro. Y'all remember CK? Y'all remember CK? If you're a real ball knower, you remember fucking CK? Even that was a scam, bro. Let me go. Hamster racing, CK. Like people. Look at this shit. Look at this. This fucking hamster lost 326 races and won 8. And it was a scam, bro. At a certain point, you've bet on 100 CK losses in a row, and you're like, all right, eventually, bro, gotta win. No, they're pre-recorded, and everyone knew they weren't gonna win. That's how bad it was, bro. That is how fucking bad it was. And it wasn't until 8 to 9 plus months after FTX fucking ghost town that in August, Friendtech launches, and then in the depths of nothing, bro, in the depths of fucking nothing, Bonk launches on Solana. Bonk launches on Solana at the most boring, uninteresting time fucking ever. Bonk launches on Solana. And I'll never forget I was on Spaces and I'm like, bro, this shit is retarded. Everything's a scam. You're so jaded. I'm like, bro, fuck Bonk. Meme coins, what are we talking about? This shit's a scam. Fuck this shit. This is a scam. And it turned out to be the saving grace of the entire industry. Bonk happens. And then Pepe happens. And then through the darkest moments ever, a new opportunity spawns, and before you know it, we're into a full-fledged meme coin season. The game fucking changes, and then Pump Fund launches January 2024, and then boom, we're back like we never left. But anyone that tells you there was this belief in crypto during 2022 that there isn't now is just forgetting what we went through, bro. The industry was over. I dropped out of college. And it was done. I was going to go back to, bro, I swear to God, I was going to go back to school. I prayed, and I'm not supposed to swear to God anymore, sorry. But I'm supposed to stop saying that. It was done. It was done, and I was going to go back to school, and I was just going to be done with this shit. But I didn't leave. And everybody else left. I didn't fucking leave. And all of the people that stayed fucking leveled up. So I just wanted to get that out of the way. That... anyone that says 2022 wasn't that bad is lying. It was so bad. Okay? And part of the problem is that we don't really have anything to point to as to why crypto is performing like this. There is a fundamental psychological problem that you, Flood, Kobe, Ansem, Frank, anyone does not have an answer as to why it's happening. Okay? And in 2022, we had an answer. Okay? It was fuck Suzu. It was fuck Do Kwon. It was fuck Sam Bankman-Fried. It was fuck Caroline Ellison. It was fuck every single one of these people that showed Luna. It was fuck him, and him. Fuck Barry Schilber, because fuck it, why not? Fuck all these people. And in 2026, everyone's kind of looking around right now, and we're like, what? Like, I don't know what, you want to blame CZ for 1010? I guess, fine. Is it CZ's fault, though, that we had like 1,000 altcoins that were fundamentally unbiddable? Is that Binance's, is that the Binance Oracle's fault that nobody wants to bid fucking Barachain? Is it Binance's fault that no one wants Aerodrome? I tend to think no. Is it Binance's fault that we have a token equity problem and altcoins are like fundamentally uninvestable? I think no. Is it Binance's fault that no one wants to buy Aave because they have this fucking lab foundations problem, or like nobody wants to buy Fartcoin anymore, or Say has no users? Like, is that Binance's fault? Like, no, it's not. It's not CZ's fault. At the end of the day, it's just not. It's not CZ's fault. And I'm going to talk about this in a minute because it puts us in a very unique spot here, where it's time. We're getting to a price where it's time to start making some theses here. But there's really nobody to blame. If you want to blame somebody, you blame the deal that Bitcoin signed with the devil, being the US government, basically. There's like 10 things we can point to. We can blame Quantum, which is like, cool, I'm down to fucking blame Quantum at 60K. We can blame the ETFs and the crypto native bid evaporating. We could definitely blame the DATs. I'm down to blame the DATs if you want. Now, the thing no one's really talking about is the DATs haven't really sold. No one's really sold. There was like ETHZilla and a couple of the ETH DATs capitulated. But like Jack Mallers hasn't sold. Tom Lee hasn't sold. CZ, CZ. Michael Saylor hasn't sold. The DATs haven't sold. Okay, and so like Bukele of El Salvador hasn't sold, so we can blame the DATs, but the DATs haven't sold. And so we are now in this spot, and this is what I want to talk about to you today, because like I'm a crypto person, but we're in this spot right now where Bitcoin. I mean, like, this is just the truth. This is how I'm feeling right now. I'm going to be completely honest with you. My understanding of markets, this is my honest feelings right now. Okay. Bitcoin is 63,000 United States dollars. Okay. 2 weeks ago, we were at 97K. 2 weeks ago, we were at 97K. Today, we are at $63,000. Okay. Now, that in of itself isn't the most significant thing ever. Part of the reason that is so significant is that we're at 63,000 United States dollars in 3 weeks on a straight line down with zero bid. Zero bid. The DATs aren't selling. The ETF outflows are not great, but they aren't 50% off the highs bad. And nobody to blame for 1010. So then this is where my head is at. We have like 30 minutes before the Saylor earnings call, which by the way, I'm really excited for the Saylor earnings call. It's in 30 minutes. And I mean, the whole world wants to know what's he going to do? Sobi tweeted, I think Saylor's going to do the Haka. He's going to start the earnings call doing the Haka, which would probably be lit. Is he going to front run and announce that they're selling? I don't know. I think no. But there is basically a rush to exit crypto at any price, by any means necessary. Sell it all today. I don't care how fast, how bad the execution, how bad the slippage is. Sell it all today. Okay, you ever seen the movie Margin Call? You ever seen the movie Margin Call? I don't want to play this right now, do I?
Do you care to know why I'm in this chair with you all? I mean, why I earn the big bucks?
Yes.
I'm here for one reason and one reason alone. I'm here to guess what the music might do a week, a month, a year from now. That's it.
And right now,
nothing more. And standing here tonight, I'm afraid that I don't hear a thing. Just silence.
Okay. So this brings me to a thought that I just can't get out of my head. I can't get it out of my head. Okay. And it's a dark thought, but this is what it brings me to. It's like, all right, when you look at this, and just level with me on this. Just level with me on this. Because, I mean, look, we're at 63K. There's no reason for us to come on here and be like fake bullish. Let's just let's look into the abyss. And, you know, it's like the bear stared me in the eyes. I fucking stared back, you know? They wrote me off. I ain't right back. Let's look into the abyss and let's take it on the chin. Okay? This chart has gone from 97 to 63 in a straight line with no bid. Okay, there was a couple key levels that we broke. Okay, number one is this, like, to get into this 80s level, I didn't think it'd be super easy. Flew through. Okay, 75.5 is threadguy read one chat message challenge. Rasmer sent a fucking chat worth reading challenge. How about that? How about Rasmer contribute something to the stream worth reading? How about that? Is this 75.5 is MicroStrategy's average entry, okay? And just to put that into context, Michael Saylor made his first Bitcoin purchase at 15,000 United States dollars, okay? Bitcoin is currently trading at $63,000, and Michael Saylor and MicroStrategy are down ballpark $10 billion. Just to, like, put that into context, okay? For 5 years, he's been buying Bitcoin since 15K, and they're down $10 billion, okay? 75.5 is his average, and you would assume that there would have been some sort of fight at 75. From just a technical, psychological level, okay? Sliced through it. I mean, let's go on the daily. We sliced through it. This is it right here. We put up the weakest fight of all time, no volume, engulfing down, sliced through it, okay? The second level, if you're a technicals guy, and this is why I'm saying that there's no reason for us to get a TA guy on, because the TA guys have no fucking clue what to do. This is why I'm saying I don't want to get the TA guys on, because let's just speculate about fucking whatever. The TA guys have no clue. Because the second level that is deemingly significant to me is like 68 and some change. 69, really. 69K. You know what the 69K is? 69K is last cycle ATH. Okay? That is a level, if you're a technical trader, that we fucking respect. You respect 69, and if sophisticated buyers want to come in and paint a pretty chart and they want to defend levels, you're defending. If sophisticated buyers that got real money want to defend levels, you're defending 69. You are fighting 69. Just from a pure chart perspective, 69 420 from a Medics, 69 even for last cycle ATH, and maybe 6666 for the devil reference on the back end of the Epstein files. Okay. And not only did we not defend 69K, but we sliced through it in the most disgusting level you've ever seen. I mean, look at this. There's not even you could go lower even on the 4-hour chart. And we didn't even like make a wick up, just slice through it. And so now we're basically in utter free fall. If I'm just being honest, we're in utter free fall right now. You could say bottom signal all you want, but the problem with bottom signals is they're subjective. And so the whole way from the whole dump to the actual bottom, there's the same amount of bottom signals. It just don't really matter until price turns around. And so we're in free fall, and there's no bidder. There's just not. And so this brings me to my question, because I think this is a very binary yes, no question. Okay. Well, Bitcoin is basically the one doing the dump. Everybody's rushing out the door. Sell it all today. Hear silence. The question I have for you and for myself to answer here is that there's one of two things that's happening. One of two things are happening right now, and your thought on this is going to determine how the market is going to play out over the next 6 months to a year. Okay. Basically, one of two things has happened. Either Bitcoin and crypto as we know it, as an industry, has just died a rapid, aggressive, violent death in a silo by itself, as the loan industry has just been sniped directly, hit directly, no ricochet. Crypto died in a silo today. Or Bitcoin is front running what the entire stock market is about to do. Bitcoin sniffed out risk, panic, and everything else is about to follow, and we just front ran the move. I'm not Michael Burry. I'm not the guy that's gonna come here and short the stock market and make $10 million. I'm not some macro genius equity trader. But if we bring this thing back to first principles, one of two things is happening. Okay, one of two things is happening. There's no other way to cut it. Either Bitcoin as an asset class is over, or Bitcoin as an asset class just sniffed out. It disagrees with current prices. It sniffed out things aren't good up there, and everything else is about to follow, and we front ran the dump. That's the take. That's the take. There's no other explanation. I have yet to hear, by the way, I've yet to hear any explanations. So this is me in my own head figuring it out. But okay, think about it like this. It's like, okay, I have survivorship bias, and I have, my net worth's in Bitcoin, and by the way, my net worth is in Bitcoin. So my net worth, which used to be a big number, is down the same amount as the Bitcoin price. As somebody that fundamentally believes in crypto, like, I believe Bitcoin is the greatest asset ever. I believe there is no scenario in the world where Bitcoin doesn't hit $1 million on a long enough time frame. I think it's fundamentally important for the world and for the economy and for society for Bitcoin to exist. And I think when it's all said and done, it'll be one of the most formative, world-changing technologies that have ever been invented, probably since the internet or maybe the fucking wheel. Okay, the rest of crypto, I don't know. Pump fund, that's our other category. But let's go direct. We're talking about the BTC, the gold coin. Okay, either you think it's dead, or you think everything else is about to follow. Okay, and here's the thought: it's like, okay, one, we have Bitcoin going down in a straight line with no bid whatsoever. Okay. Bitcoin often acts as this like liquidity valve far out on the risk curve, and it moves first. Tech stocks pump, Bitcoin pumps harder. Tech stocks dump, Bitcoin dumps harder. That hasn't really been the case. Tech stocks have sort of been flat for the last 3-6 months, especially the biggest of the biggest. Nvidia, SPY's been just like creeping up, but like not great. And then the foundation is getting chewed out. It's like there's termites chewing everything out. SaaS just getting destroyed. All of these stocks are getting chewed out like termites. But because S&P is so heavily weighted by the Mag 7, by Nvidia, by Google, by Amazon, by these things that have been protected, there's been a few spots to hide. Stocks are ATH. Okay? But it's like, one, we had this insane metals pump that nobody had any explanation for me as to why this happened. No one had any explanation for me as to why this happened. Okay? No one had any explanation where this came from. Look at this chart. I mean, this is pumping like historically. This going crazy means end times. This going crazy means people have no confidence or faith in risk United States markets. They have no faith in U.S. equities. They have no faith in U.S. treasuries, U.S. bonds. Okay, that's at least how I understand how markets work. Forget silver and everything else. Okay, gold moving like this means there's a fundamental disagreement and lack of confidence in U.S. assets. Okay, that happened, number one. Metals pump, absolutely no explanation. At the same time, Bitcoin's getting destroyed, which at least the last 5 years or so is directly correlated to stocks. As much as we wish it wasn't, it just like acts as leverage on the Qs. Thoughts on Sweet? Dude, are you fucking kidding me right now? I mean, with all due respect, I don't have any. There's no thoughts on Sweet right now. I mean, I'm talking about how the stock market is going to dump 100% in a candle, and you're asking me about Sweet. Run. Okay? That's number one. Okay? Bitcoin getting destroyed. Gold and metals going absolutely nuts. Okay? At the same time, you have this CapEx spend getting so ridiculous. Okay? You have how long can the snake eat the snake go on, where it's like company invests in OpenAI, stock pumps because they're getting AI exposure. They take the new money to invest back into OpenAI, stock pumps because they're getting OpenAI exposure. They take the new money to invest in OpenAI, stock pumps because they're getting more OpenAI exposure. And this thing runs in a circle, 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 until eventually Sam Altman goes on a podcast with Brad Gerstner and he's like, hey, you have $15 trillion in commits over the next decade and you make nowhere fucking near the revenue to justify this. How are you gonna make these payments? And Sam Altman responds and goes, hey Brad, if you would like to sell your OpenAI shares, I can find you a buyer. And you think, but the question, no answer, right? At the same time, Sam comes out and starts hedging these comments, talking about basically setting the stage for our earnings to our revenue to go down and to be underwhelming. And at the same time, you get like this. Let me find this. You get this. Google and Meta come out and basically say that they're going to significantly slow down buybacks, which they've been doing. They've been combined buybacks. Historical average. 2022, they bought back $85 billion. They bought back 80 billion here, 90 billion here. Here they bought back 80 billion. 2026, they're proposing buying back like 20 billion. That's slowing down significantly. And you just get this like general feeling right here of like weird mix of certain alt BTC pairs beyond hype look constructive. AI names with many blow-offs, matching vibes, index rollover, potential duration mismatch, and commodities. You basically just get this like alt season in stocks where there's what it feels like is liquidity is tapped and we're just rotating from like Nvidia all the way down the risk curve until we're like just like ripping the Russell and we're pumping any single weird stock we can while the big names just get chewed out from the bottom, just getting hollowed out. These SaaS stocks are getting hollowed out like termites are fucking rummaging through. And so then you look at this chart and you're like, all right, the entire stock market basically looks like this right now with all of this negative sentiment, Bitcoin calling fucking bluff, gold calling bluff. You come here and you look at this and you look weekly chart, SPX here, Nvidia ready to fall off of a cliff, Amazon actively falling off of a cliff, Tesla, who Dev just announced a new token, ready to fall off of a cliff, Microsoft actively falling off of a cliff. And you just think to yourself, like, Palantir falling off of a cliff. Robinhood looks worse than the crypto stocks. Coinbase, crypto stock, of course, it looks terrible. And then you just think to yourself, and you're like, Meta looks fine, the only one. You just think to yourself, everything's looking like it's about to die. Like, I don't know. I don't really have a sophisticated take for you. It doesn't really seem like anybody does. But Bitcoin is calling bluff. Bitcoin is calling bluff on stocks, ATH. Bitcoin is calling bluff on AI capex. Bitcoin is calling bluff on SPY being propped up by like 4 names while the stock market gets hollowed out in SaaS. Bitcoin is calling bluff on OpenAI and Anthropic and all these AI companies' ability to just like beat revenue after beat revenue after beat revenue. And Bitcoin is just calling bluff, bro. It's calling bluff is what I see. That's what I see. What do I fucking know? I don't know. But you believe one of two things to be true. Like, this is just where we are in the world. You believe one of two things to be true. You believe Bitcoin just died today and it's over. You believe it died today. You believe it died today, it's over, and this thing is done. Or you believe everything's about to fucking implode. Okay? And if you believe the former, then you're selling Bitcoin and you're buying Nvidia is probably what you're doing. You're selling Bitcoin and buying Nvidia, even at this battered down price. Or if you believe the latter, then Bitcoin's closer to the bottom than not, and you're shorting everything else. One of the two, right? I mean, River says Discord. You better be good, man. I don't see a middle ground there. What's the middle ground? What's River says? You didn't Discord me. I don't see a message. You following? Telegram. Oh, Discord IPO March. Oh, also the other thing we didn't talk about. The other thing we didn't talk about is every AI company racing to IPO as well. OpenAI is like, we're going to IPO at $1 trillion, which is, I mean, probably the local top of this, right? We have no more money to raise from investors. They can't get any more investment. So we have to go public. And then Elon's like, fuck it. All right. SpaceX acquires XAI and we're going to combine and we're going to go public at 2 trillion and we're going to do it first. Because if someone's going to kill this shit, it's going to be me. If someone's going to kill this shit, it's going to be me. And there's a race to go public, bro. There's a race. What's your thoughts on Flog? I mean, are you guys fucking trolling? Are you fucking trolling, bro? Are you out of your fucking mind? What's your thoughts on Flog? Give me a fucking break. And so look, I'm not Michael Burry, okay? I don't have 100 years of stock experience. I didn't live through 2008. I lived through FTX and I lived to tell the story, but I don't have 1,000 years of stock experience to like tell you how this is going to play out. My real read is we're in unprecedented times, and the smartest guys I know are I mean, we can like look at some tweets. Some of the smartest guys, like, we'll go flood first, we'll go crypto first. He's buying Bitcoin. It's confused, but Flood's buying Bitcoin. What's the point of having cash if you're not bidding on a day like today? Bitcoin pumping, holy shit, dude. Yeah, it's just so bad. So Flood's buying. We go to stocks. Chris Camillo, who's one of my favorites on the Market Wizards, is tweeting like, the market's wrong about Amazon. He's freaking out. The market's wrong. They don't know what they're talking about Amazon. This is before it just got destroyed. Market's wrong about Amazon. Then you have like the guy I watch in the morning, Amit Investing, is like, no clue. Is it market's pricing in Warsh? Like, maybe. I mean, the market started getting destroyed after Warsh got appointed, but are we really pricing in Warsh this aggressively? Like, I don't know, maybe. He's tweeting, this is what he's tweeting. He's tweeting pain. And the smartest guys I follow have no clue. Okay? Now, the one thing you get by being in crypto this aggressively, this much, is SaaS swings 5-10%, and the stock guys are like losing their mind. They're losing their mind. They've never seen this. We see 5-10% every day, basically. And so the one optimistic take is like, we have a reasonable understanding of how to rotate and like move through these quick rotations so fast. So I don't know. Maybe you're better off being a crypto guy and not understanding how to trade stocks. I don't really know. Then you see takes like this. Plur Daddy, who I think is one of the smartest guys that we follow, who it's an extension of the Thicky take, which is basically like, you've had 3 years to allocate to any asset. M2 in the US is completely topped. There's no more money left to invest anywhere. And then M2 in the East just went crazy on the back end of gold and metals pump. And it kind of brings me back to the Daniel Tenerero take, if you're a real OG in this stream. The Daniel Tenerero take was basically like, we will go as high as every new AI model release being a step function better than the last will allow us to go. But how long can that go on, right? How long is Opus 4.6 going to be underwhelming? How long can that go on? Until, yes, the tech is great, but it's moving too fast and we need more time to like consolidate capital. I'm also not, let's see. I'm really not trying to come here and be like a complete bear, but you have to reevaluate your thesis a little bit when Bitcoin's 66K, right? I mean, you can't go with the same thing that we've been going with at 66K, 63K. Something's happened. And I'm trying to make the most sense of it, and the most sense I can make is either Bitcoin died or everything's about to die. Right? Let's read it. Let's do this article real quick. Or it's a shakeout. Now you don't shake out minus 50%. I want to read this. This is one of the smartest guys on Twitter. If you don't follow this guy, you should absolutely follow him. Let me ask Claude to summarize it real quick. Let's do Opus 4.6. Fuck it. Summarize this article as tight as you can while keeping the core message. Summarize earnings in 15 minutes. Okay, here's the take from this article. Plur Daddy, he's seriously one of the smartest in on Twitter. AI capex is draining the economy's dry powder. Unlike fiscal stimulus, where the Fed backstops duration, hyperscaler spending forces the private sector to absorb it with no backstop. Once excess capital is exhausted, every dollar into AI must come out of something else, creating a crowding out effect that functions as an inverse QE. Speculative assets, crypto, momentum stocks, long duration plays get hit the hardest. Near-term cash flow assets outperform because rising cost of capital pushes duration. The author is mostly cash playing defense, waiting for better entries. I mean, how else can you justify what's happening to stocks right now than this? Like, no one has a justification for why SaaS is getting destroyed so bad. What other justification could it be other than we've hit a max amount of money and everyone's taking their money and they're throwing it into AI? Like, which also, by the way, happens to all be private companies. There's been no retail wealth effects on Anthropic, OpenAI, SpaceX, XAI. None of this. There's been no wealth effect on this at all. And like, I know it's not that simple, but sometimes I think it is that simple. Like, let's see, like, watch this. What public companies are the directly related to? Are we gonna watch the earnings call in 15 minutes? Yes. Like, look at these stocks, bro. Let's go watch. Let's go. Salesforce. Claude Code drops launches February 24th. Okay. Claude Code drops right here. Down 40. Salesforce down 40%. ServiceNow. Uncharted. Top tick. Like right here. Claude Code drops right here. It's down like 50%. Workday. Same thing. Claude Code drops right here. Down 50%. Next. HubSpot. Top tick on this one is mesmerizing. February 25th. Down 70%. Like, look at this, bro. Every single stop. And so at a certain point, it's like, yeah, Jensen comes on and says it's overblown. Jensen says it's overblown. SaaS companies are dumping harder than they should, but Jensen's at a fucking Cisco conference, bro, talking about this. Let's see what Cisco looks like. Okay, this looks insane, actually. But Jensen's whole business. It's his whole business. Like, he needed to do well. He needs it to do well. So I don't really take that for that much. It's like Jensen needs that to be the case. Jensen needs it to be the case. And so you look at Cisco actually looks insane. But you look at these fucking companies and you're like, bro, there's nowhere to hide. There's actually nowhere left to hide. There's nowhere left to hide. These are insane, these tickers. Datadog. Down. Everything's down bad. Just down bad, bro. All these. CrowdStrike. Even this is like off that top tick. It doesn't seem like that much. 35%. And so it's like, I don't know. But I sit here and think to myself, as someone that's never really traded stocks, I'm not a short seller. And I was not here for 2008. I wasn't here for a lot of this. I tend to think the latter of my thesis, which is that Bitcoin is not dead, crypto did not fail as an industry, and crypto smells bullshit, which would probably mean we're closer to the bottom than not. Now, what does that actually mean as far as price goes? Do I know? No, I have no fucking idea. My whole network's in Bitcoin. I'm not selling here, but that's what it feels like to me. Okay. And so if that's true, that probably means some carnage is coming. Okay. We have 10 minutes before Sailors. So I'm going to give you an optimistic take. I'm going to give you an optimistic take, and then we're going to listen to Sailors. We have to listen to Sailors' earnings call, right? Is everyone down for Sailors' earnings call? Okay. I'm going to give you an optimistic take, which is Mando came on stream yesterday and he said, if you're a young person, you should be happy and excited about markets getting crushed, because for the first time in your life, probably you'll get a chance to buy cheap asset prices, which is true. Pregnant Man Soul with a 69 gifted. What a time for that. My God. Thank you, brother. I hope you're doing well. Thank you, brother. Fuck. What a time for that. Mando came on stream yesterday and he said that if you are a young person and you're trading markets, you should be excited about bad price, because it will be the first time in your life you've ever got an opportunity to acquire assets for cheap. Okay. The first time I tried to buy Bitcoin, it was fucking 50K, 55K. Like, I wasn't paying attention to crypto until Bitcoin was 55K, something like this. Right. And so I was thinking about this and how we're going to make it as traders. I've been trading for 5 years. Are the people that started buying crypto when everything was free and dead in 2019, and then basically held it through the most perfect conditioned up only bull market through 2020 and made it? Are those people great traders? All they had to do, hey, Trice, thanks for the gifted. All they had to do was sit here and fucking Bitcoin and not piss it away in the most up only, never conviction tested trade in the history of your life. Are those people geniuses? And I would argue yes. I would argue yes. Those people are geniuses. Because how much of the fucking game is game selection, bro? How much of trading is game selection? Like, if I go to LA Fitness right after stream and I play a pickup basketball game against 9 fat fucking pigs, and everyone's 300 pounds and can't get over fucking half court, and I run up and down the fucking court, hitting layups, left hand layups, step back here. I'm just fucking, they're fat, disgusting pigs, and I'm just scoring nonstop. I win every game. Am I a great basketball player? Like, am I a great basketball player? And I think the answer is yes, I am. Because who says no? Like, if you're a bad poker player, but you go to some game with a bunch of rich billionaires and you fucking rinse everyone, take their money, and walk out of there with your fucking dick in your hand and got rich, are you a great poker player? It's like, yeah, P&L says yes. Okay. And I did a lot of thinking about this last night, and I'm like, I don't really, I'll just be honest. There's a reason people don't day trade. There's a reason day trade, especially with leverage and options, is like just the thing people don't do. Everyone tries to learn how to trade with day trading, then nobody does it. Okay. I am not convinced or convicted in my ability to make it flipping long and short on the 15-minute time frame of silver chart. It's just not going to happen. It's just not. 100 mil, make it. 100 mil, for sake of conversation. 100 mil is making it. It's not going to happen. I am not going to make 100 M by fucking flipping long and short on the 15-minute chart, trading supply and demand fucking boxes on silver. It's just not going to happen for me. However, I am going to make 100 M by being really early and aggressive, by seeing a massive bubble forming in an industry that's going to fucking PVE for 5 to 10 years and get bid up into infinity, and being in the right place at the right time, just like the people in 2019 to 2022 in crypto. Like, that's how you make 100 M. That's the only, like, or the people that started buying internet stocks, all they had to do was close your eyes, click Amazon, and put your hands away from the computer in 2003. Are those people geniuses? It's like, yes, yes, they are. Undeniably, those people are geniuses. And so the bright spot of a potential carnage in the market, which may, like, it may not happen. We may look back on this as the peak bottom of the chart. This could have been the bottom. We rip it back to 100K. SPX is at 7,200 and we're fucking out of there. And you guys are like, threadguy, you fucking retard. But if that's not true, AI getting destroyed and stocks getting destroyed and crypto getting destroyed does not change the fundamental value proposition of the asset class. It doesn't change the asset class, okay? Because the reality situation is we're sitting on a forefront of the intersection of the two most formative technologies of our generation. And there will be another 2019 to 2022 crypto-like bubble explosion, okay? And it will probably, in my opinion, be crypto. It will probably be AI and, or crypto and. Some intersection of the two. And the only thing that you have to do is see the bubble inflate and fucking rush in to explode it. What's the Druckenmiller quote? When I see a bubble forming. Oh, it's George Soros. When I see a bubble forming, I rush in to buy, adding fuel to the fire. This is how we're gonna make 100M. That's how we're gonna make 100M. So basically what I'm saying is that if we have to pick up dead bodies off the fucking floor when this is all said and done, no matter what happens, then we're gonna pick up dead bodies off the floor and we're just gonna be right. We're just gonna be right. Because we're gonna be right, okay? Because there's gonna be another bubble. This AI technology is I mean, if SaaS is our forward indicator, it's telling us it's going to change the world. It hasn't really done it yet on the consumer side, but it's going to happen. And we're just going to be there to fucking add fuel to the fire in the bubble and fucking rush this thing till it pops. Okay? And so I don't think that we should like fear carnage in the markets. It's going to be scary. It could be scary. It could be scary because I really do believe, like, I think crypto is calling bluff. I don't think crypto just died. I don't. I think Bitcoin is the most important financial technology to ever be created. I really don't. And so that's my take. That's what I think is happening right now. That's what I think is going to happen. And that's how we are going to get through it. Now, let's do the fucking earnings call. How do I get on? Did they invite me? I signed up for it. I'm going to try to ask a question, by the way. Here it is. Thank you for registering for Strategy. Announces fourth quarter 2025 financial results. You can find more about your webinar here. Join webinar. Open Zoom meetings. Let's fucking go. 4 minutes. 4 minutes. Okay. Does anyone disagree with my? What do you think about my takes? Am I just crashing out, or am I just like, am I right? I don't really know. Let's read the profit tweet real quick. Someone sent me that. Orangey should be in jail. Stop it, bro. What's his Twitter? Meta profit. You'll just be trolling, bro. I think we had crush a tweet, but I've been told winning requires kind of silly. We're now at $200,000 committed. Whoa. Interesting. There's just no one wants, everyone's afraid of risk markets right now. And that's okay. It's okay. We're just gonna be in the right place at the right time. If they're like, I don't know. I refuse to believe that crypto just died. All right, I'm gonna go take a break. I'll be back in 30 seconds, and then when I come back, earnings close on. Let's lock in. Everyone fucking lock in.
Don't think about what comes after or what came before. You just gotta bend your knees, take a deep breath, and jump. And you might think, what if I fall? Well, What if you don't? What if you fly?
Recording in progress.
Let's go! Saber, it's time, baby!
Hello everyone, and good evening. I'm Shiri Jajodia, Corporate Treasurer and Head of Investor Relations at Strategy. I will be your moderator for Strategy's 2025
Oh, brother.
fourth quarter earnings webinar. We will start the call with a 60 minutes presentation, starting with Andrew Kang, followed by Fong Lee, and then Michael Saylor. This will be followed by a 30 minutes interactive Q&A session with 4 Wall Street equity analysts and 4 Bitcoin analysts. Before we proceed,
Their
I
chat?
will read the safe harbor statement. Some of the information we provide in this presentation regarding our future expectations, plans, and prospects may constitute forward-looking statements. Actual results
Let me tweak it
may
with that.
differ materially from these forward-looking statements due to various important factors, including fluctuations in the price of Bitcoin and the risk factors discussed in our current report on Form 8K filed with the SEC on October 6, 2025, and under the caption Risk Factors in Strategy's quarterly report on Form 10Q filed with the SEC on November 3rd, 2025, and the risks described in
let's
other
go.
filings that
Let's go.
Strategy may make
It
with
might
the
be a little
SEC
before
from
Sailor
time to
comes
time.
on, but this is actually important to the
We
market, I
assume
think.
no obligations to update these forward-looking statements which speak only as of today. With that, I would like to turn the call over
God.
to Andrew Kang. the
Andrew Kang,
CFO
let's
of
go. Market's
Strategy.
on 63K even. Let's see what happens. The market's going to react to this.
Thank you, Sharish, and thank you everyone for joining our call today. I'll start by touching on a few of our highlights for Q4 as well as for the full year 2025. We closed the year with 713,502 Bitcoin on our balance sheet, which
3.4%.
represented
Jesus.
approximately 3.4% of all Bitcoin that will ever exist. This
3.4%.
reflects continued discipline around Bitcoin accumulation through the fourth quarter and further reinforces our position as the largest corporate holder of Bitcoin in the world.
Just like at what cost?
Also during 2025, we successfully raised over $25 billion of total capital, funding growth across our treasury strategy and expanding our product ecosystem. We now have 5 listed preferred equity securities, which has broadened investor access across yield, duration, and risk profiles. Our execution throughout the year puts us in a position to enter 2026 with a stronger balance sheet, more access to liquidity, and upside when hopefully Bitcoin price rallies soon. Next slide.
When hopefully Bitcoin price rallies soon.
2025 overall was a very important year with several strategic corporate events that I think strengthened our foundation as the world's leading Bitcoin treasury company. We adopted fair value
Biggest holder, by the
accounting
way.
at the beginning of
Number
the year,
one holder by a mile.
which provided greater investor and market transparency of our Bitcoin holdings, which are now, as you know, marked to market each quarter. Second, Treasury and IRS guidance confirmed that unrealized Bitcoin gains would not be subject to additional corporate alternative minimum tax.
There's no unrealized gains.
We also received the first ever credit rating for a Bitcoin treasury company, which marked an important step, I think, in institutional recognition and setting the foundation for future progress. And lastly, in Q4, we established a $2.25 billion cash reserve, which provides over 2.5 years of
Start
dividend
using it.
coverage. This is an important enhancement to our overall risk management framework and supports our ability to meet our interest and dividend obligations through market cycles, like the one we are seeing today. And lastly, MSCI
Oh my God.
confirmed that digital asset treasury companies will remain
They're watching
eligible
the
for
10-minute
inclusion in its global market indices, which we believe was the appropriate outcome. And I'll touch a little bit more about that later on in my presentation. Next slide.
This guy's miserable, dude. Sailor's on in 10 minutes, probably.
Next
10
slide.
minutes for Sailor.
Thank you. Turning to our Q4 financial results, we reported an operating loss of $17.4 billion and a net loss of $12.6 billion. These results were obviously driven by the quarter-end decline in
net loss of
Bitcoin's
$12
fair
billion?
value under our mark-to-market accounting.
Is that what you said?
Next slide.
Net loss of $12 billion? Oh my God.
For the full year, we reported an operating loss of $5.4 billion and a net loss of $4.2 billion. We updated our target range for the full year 2025 precisely because our results are highly dependent on Bitcoin price.
You think he's nervous right now?
Meaningfully based on market conditions. It's important to call out that our full year results were within our target guidance based on where Bitcoin price ended the year. And while accounting outcomes may fluctuate quarter to quarter, our long-term focus remains unchanged. We are committed to increasing Bitcoin per share and building durable shareholder value over the long term. Next slide. Turning to our Bitcoin KPI performance for the full year, at the start of the year, we established clear KPI targets tied to Bitcoin per share growth while recognizing a wide range of possible Bitcoin price outcomes. Under those conditions, we delivered a BTC yield of 22.8%.
We're down $10 billion. Next slide.
Beating the lower end of our target range, which was set at 22 to 26%. That translated into a total BTC gain of 101,873 Bitcoin and a BTC dollar gain of $8.9 billion, also beating the lower end of our target range. I think the key takeaway is that even with significant volatility in Bitcoin price, our strategy remained disciplined, and we executed against our KPIs of increasing Bitcoin per share and compounding shareholder value.
It's like the worst KPI ever. Bitcoin per share goes up when Bitcoin price gets fucking nuked. Obviously, you could buy more.
Since adopting Bitcoin as our treasury asset in 2020, we've consistently added Bitcoin per share each year. 2025 was yet another strong year in this regard, and building on the momentum of prior years and demonstrating our ability to add more Bitcoin per share in both good markets and in challenging ones as well. Our focus remains unchanged.
Our stock is down 60%.
As I mentioned before,
Next slide.
Our goal is to systematically increase Bitcoin per share over time, regardless of near-term market cycles, and continue to deliver durable BTC value for our long-term investors. Next slide.
Next slide. Fuck!
Thank you. Now, turning to the balance sheet, we'll start at the top here. Our digital assets.
When is Sailor on?
From $23.9 billion at the end of 2024.
What is he talking about?
To $58.9 billion at the end of 2025. This was due to a $17.9 billion increase in fair value at the beginning of the year balance, as well as the fair value of the Bitcoin we added in 2025.
Dude.
As a result, we ended the year with also $2.3 billion in cash and cash equivalents, of which, as I mentioned earlier, $2.25 billion of that represents our USD cash reserve. As of the end of 2025, we now carry also a $1.9 billion deferred tax liability, which just reflects the accounting difference between the market value and the
we also have $4 billion in taxes. Next slide.
I'll remind everyone, this is a balance sheet item. It is not a cash tax obligation, and it does change
next slide.
Quarter to quarter with the price of Bitcoin. Moving on. Oh, can you go back, please? In terms of long-term debt, we ended the year at $8.2 billion, which takes into account a new convertible bond as well as an equitization of a prior convert which we executed.
This really makes me
in
appreciate crypto.
early
Previous slide.
2025. As we said
Bro,
before,
give this
we do
brother the
not
clicker.
intend to issue any new convertible debt in the future, and will focus on assessing strategic liability management opportunities to the extent market conditions make sense. And over time, we intend to reduce
price
our
up since they
leverage
got on.
to further enhance our credit
Let's see, where's
profile.
Bitcoin? Where's Bitcoin?
We also
It's at
added
$500 since it started.
$6.9 billion
Bitcoin plus 500 since it started. Keep talking, Kang.
diversifying our capital raising channels.
Next slide.
And as a result, total equity, including both preferred and common, rose to $51.1 billion at the end of the year, up from $22.8 billion a year ago.
Next slide.
We added $6.9 billion of preferreds through 5 distinct IPOs, as well as subsequent ATM activity. And our common equity increased to $44.2 billion through our ATM. We deployed all of that capital in an accretive manner to acquire more Bitcoin. As I mentioned before, we delivered 22.8% BTC yield, and we established the cash reserve. I'd say the year-over-year growth of our capital base strengthens our balance sheet and provides a more durable base to continue raising capital efficiently and acquiring more Bitcoin over the long term. All right, thanks, Shirish. Next slide.
There you go.
At the end of Q3, at the end of Q3, the market value of our Bitcoin position was approximately $73.2 billion. That was based on a Bitcoin price of about $114,000. During Q4,
they're going off a price.
Bitcoin, as we all know,
114,000 is what this
a
presentation is
price
based
decline,
on.
which drove the total unrealized fair value loss of $17.4 billion. Look, quarter-to-quarter moves like this can be sharp, can also be unsettling, but it's important to emphasize that our strategy is built for the long term. It's built to withstand short-term price volatility, even short-term extreme conditions like we're seeing today. And importantly, even in a volatile environment, we continue to execute. We purchased an additional 32,470 Bitcoin in Q4 for approximately $3.1 billion. Next slide. For the full year 2025, the market value of our Bitcoin holdings increased by approximately $17 billion from $41.8 billion at the end of 2024 to $50.
Notice how he won't say what price they bought it
at
at.
the end of 2025.
He's literally skipping the price.
We added approximately 225,000 Bitcoin.
God, this is bad. Next slide.
We also recognized an unrealized fair value loss of about $5.4 billion across the year.
God,
but we significantly expanded our Bitcoin position, right? We increased our total holdings.
We're down $5 billion this quarter, but we have more Bitcoin.
447,000 to 672,500 Bitcoin for the year.
We're getting closer to Sailor. I mean, I'm dying for Sailor. Please, this is so slop. Who is this for?
Our total interest and dividend obligations are now $888 million, which is made up of about $35 million in interest on our converts. That represents an average cost of about 42 basis points. It's also made up of $713 million in dividend obligations from our cumulative preferreds, an additional $140 million related to our non-cumulative preferreds. You can see here at the bottom, our cash reserve of $2.25 billion, which was established in Q4, now provides over 2.5 years of interest and dividend coverage. And it's an important and direct benefit to our debt and credit investors. Next slide. And lastly, in October, MSCI opened a public comment period around the proposal that could have excluded companies whose digital asset holdings represented more than 50% of total assets. We felt it was important for us to be a voice on this matter, and we submitted formal written feedback to MSCI. We noted that this threshold would, in our opinion, be discriminatory towards digital assets. It's arbitrary. And in many ways, I think the proposal was unworkable, and that it rested on a mischaracterization of strategy. As a result, MSCI determined not to implement their initial proposal, and as a result, we have not been excluded from MSCI's indices. I'd note Strategy is an operating company. We have 30 plus years of history in software and tech. We have 1,500 employees. Last year, in 2025, we generated $477 million in annual revenue.
Is that true?
And while our Bitcoin holdings has grown significantly from a balance sheet perspective, we are an operating company with a treasury balance sheet built upon a
1,500
commodity.
employees.
You
say 1,500 employees?
On a final note, I just want to say thank you. We appreciate the strong support we receive from both active and passive retail and institutional investors, regulators, and policymakers, all in support of our efforts on index
all they do
inclusion.
is buy.
We thank you for that.
1,500 employees and nobody can buy Bitcoin at market price,
and we look
ever.
forward to working with the industry in the coming year on that as well. So with that, I will turn over to
1,500 employees and nobody knows how to acquire Bitcoin at a reasonable price. Not one.
Thanks, Andrew. I first just want to acknowledge,
this?
I understand the market conditions for today's call is challenging. And the fact that we have
the
thousands
world is so
of people
cruel.
watching this is a testament to your intellect.
The world is so cruel, bro.
Your conviction.
It's today.
So thanks everyone for joining us today. I also want to share, look, some of you bought Bitcoin or MSTR in the last year. This is your first downturn. My advice is to hold on. Remember the fundamentals that cause you to buy Bitcoin. It's because Bitcoin is the digital transformation.
He don't even believe what he's saying.
Or maybe it's because it's the hardest and most ethical form of money.
He don't even believe what he's saying.
Because you believe in a non-sovereign censor resistance.
They're on an earnings call talking about please don't sell.
None of these fundamentals have changed. They didn't change in the last year. They haven't changed in the last 18 years. For the MicroStrategy shareholders and the strategy shareholders now, remember the fundamentals of why you bought into MSTR Common. Because we are levered and amplified Bitcoin. We're built to outperform Bitcoin over the long run. It could be because you see us as digital
Next slide.
We invented the enterprise business intelligence software space in the 1990s, and we invented digital treasury companies in 2020. Or it's because you believe
Sailor, please get Sailor. Please get Sailor on.
None of that's changed.
Who is this?
And for those of you who have been with us on this journey since 2020, you've seen other periods of Bitcoin and MSTR downturns, and you held on, and you were rewarded for your conviction, so thank you. And perhaps I ask that you share your wisdom and your confidence with those who are newer to the community. X is a great place to do this. In person is a great place to do this. And a great opportunity to get together in person. Next slide, please. Is Bitcoin for Corporations. We will have our 6th annual Bitcoin for Corporations in Las Vegas in 3 weeks, February 23rd through 26th. Love to see you there.
Get him off.
To get together and learn about
get him
Bitcoin,
off the
Bitcoin
screen.
treasury companies, digital
it's in
credit,
Vegas.
digital capital, and digital money.
Bro said it's a
also a great
timeshare.
place, to see our software business.
It's like my homie from high school trying to sell me the knives.
Our software business.
You'll have a homie from high school that was like trying to sell you like the knife package.
And over 3,000 customers. And they'll be there showcasing the transformation of intelligence and the intersection of AI and BI. And I would like to note, we had a great year last year in our software business. We saw a big cloud transition as our revenue went from decline to increase at 3%. And our cloud revenue went up 65% year over year. So I invite you all to join us in Las Vegas, February 23rd through 26th. Next slide.
Where's Taylor's next? Taylor's next.
This is our business. We have been buying and holding Bitcoin since the 3rd quarter of 2020. Every single quarter, we now have 713,502 Bitcoin with a total acquisition cost of $54 billion and a $76,000 average Bitcoin purchase price. Recognizing now that Bitcoin's below the average Bitcoin price, you might ask the question, what does that mean? It really doesn't mean anything, right? It doesn't mean that we have any issues servicing our debt or paying the dividends on our preferreds. We don't have any covenants or triggers that say when Bitcoin price goes below our average Bitcoin purchase price, that anything has to occur other than we continue with our strategy. Next slide.
Okay, like that. Good, good, good. Keep saying that. We're not gonna sell. Say that.
2025, as Andrew mentioned, was a pretty big year for us in the capital markets. As you see here in 2024, we raised $22.6 billion, and we actually outstripped that number in 2025. The big change last year was we moved from convertible debt, $6.2 billion in 24 and $2 billion in 25, to $7 billion of preferred. We invented digital credit, and we invented the preferred market, which now other Bitcoin treasury companies are moving into, issuing perpetual preferreds. We're pretty excited about this. You'll see here we had 5 IPOs. The other thing I'll note here is that
The worst performing
year-to-date
IPOs of any sector, by the way.
in the face of
We
a
created
tougher
the worst
Bitcoin
thing that's
market,
ever happened to
we were
crypto,
able to,
by the
in
way.
1 month, raise an additional $3.9 billion of capital.
We
And for the most
created,
part, buy
like-
Bitcoin with that. Next slide. So what do those big numbers mean? How do you think about that? In 2024, we were the largest U.S. issuer of equity in the entire
It just
country.
got to be Saylor to get on
Last
here.
year, 2025, we were once
Look,
again the largest.
Michael Saylor has to get on here, and I'm not even trolling when I say
8%
Saylor has to get on
of
here
the
and be
entire
like,
equity
how many
capital
chairs are you
markets,
sitting on?
6%
Like,
of the common equity market,
Dead
and
ass.
33% of the preferred equity market. We are getting people to invest in our company through equity raises and preferred raises, and turn that into Bitcoin, Bitcoin per share, and Bitcoin yield to our shareholders. And we're doing it with the intersection of traditional finance. So some of the largest banking partners in the world, Morgan Stanley, Barclays, Moelis, TD, Benchmark, Clearstreet, have all been participants in these markets.
Just a
and they
brutal
give us
listen.
distribution out to wealth management and to retail and to institutions. So we've been
Hard
very
listen.
successful in the last year with continuing our strategy. Next slide. You'll see here, in addition to getting folks to participate in our equity raises and our equity capital markets, we continue to add more and more research analysts. Here you can see price targets, and you can see they all have buy ratings on strategy. Next slide.
Wait, who are those analysts?
So let me talk about digital
buy
credit
rating?
and
Who
what
was?
are we doing
what was
in
that?
digital credit and why digital credit is
They
important.
just skipped that so
slide.
quickly. Who had every model
First,
analyst
I
and buy
mentioned
ratings?
2025
What
marked
was
the launch
that?
of digital credit, and we launched 5 different instruments. We started with Strike, which is convertible.
Bro, what was
digital
that?
credit,
You
and it
skipped
was
that
really
so
a gateway
fast.
from convertible debt, which we no longer are issuing, to a convertible preferred note.
What the
we
fuck
then
was
launched
that?
Strife, which was our most senior of our instruments, our first fixed perpetual digital credit instrument, and after that we launched our most junior one, Stride. And as you can see, the
Every
size
analyst
gets
is bullish. I'm
bigger
telling you
and
who. Next
bigger with
slide.
each one. And then we launched the most important, which was Stretch, which is $2.5 billion in our first digital credit instrument.
Everyone's bullish.
And
Next
then
slide.
in November, we went to the Euro market and launched Stream, which is $717 million in US dollars. And the importance of this is accessing a European market and those who want Euro exposure. Our plan with Stream is to, over time, uplist it into a regulated retail accessible market.
This is dark.
And we're excited to do that over the course of this year. Next slide. Here's the overview of digital credit. I think the most notable here is to look at as an example the liquidity
Sailor
that
man,
we're
you gotta
experiencing in
clutch this,
Stretch.
'cause this is rough.
$118 million
timing of this
traded
is
a
so
day over the
evil.
last 30 days. As a comparison, typical US-based prefers trade $1 million a day. So these are very liquid and very interesting instruments. The dividend at 11.25% and on a tax equivalent basis, 18%. And you also see the volatility here at 7%. So it's an instrument where we've been able to start to target a very finite price close to $100 and drive that volatility down to 7%. Let's go to the next slide. So what is 2025, the third quarter, and the rest of 2026 been about? It's really been about seasoning our digital credit. And by seasoning, I mean maturing the market and making the instrument more creditworthy. So after we launched Stretch in July of 25, there were a couple actions we took.
Dude, they should
make
just like
credit,
address the price.
more creditworthy and a better investment. First, and Andrew mentioned it, the CAMT guidance was a big deal. This was a big change by Treasury and IRS.
I mean, let's pull a chart up,
the
right?
importance of the digital asset ecosystem, and that there should.
If this
be
was a
no
crypto founder, he would fucking
capital
pull the
gains
chart up and would
taxes
talk
on
about what
Bitcoin.
levels we're buying and how we're going to get back to ATH.
The second thing is we got an S&P rating,
It's the difference between
B-
crypto.
issuer credit rating, which is a starting point for us to be able to access
Crypto devs don't
different
fucking
types
play,
of
bro.
investors in the credit market. November 4th, we got to what really was our target, was to get Stretch to trade at par, $100 for the first time. $100 is important because it decreases the volatility of the instrument. It shows that we're able to do something that no other preferred instrument has done in the past, which is to target a specific price, and it allows us to raise more via our ATM.
I think it's based on
And
like
we added our
100K
US
BTC,
dollar reserve.
by the way.
At the same time, since we launched Stretch, we have added 105,732 Bitcoin to our balance sheet. That's about 16% more. These are all actions we took to make our digital credit stronger over time. Next slide.
How do
So
they
what
have
is Stretch?
1,500 employees?
Right? Why are we so enamored?
How do they have
and excited
1,500
about
employees and they
Stretch?
can't
Why did I
execute a
say
transaction at
2026 is the
market
coming
price?
out party for Stretch. Stretch is one of the most attractive instruments and securities in the market today. It pays an 11% effective yield, 18% on a tax equivalent basis. We've paid monthly dividends on time, on schedule. And we have said that we expect the return of capital treatment for the next 10 years. We'll run our business to be able to give everybody
no one
tax
addressed that.
deferred
1,500
earnings for the next
employees
10
doing
years.
what?
We're targeting a $100 price. The volatility is 7%. It's actually decreased recently to 6%. And we have mechanisms above and below that price to keep the price stable. It's quite a bit of feat of financial engineering. And it's extremely over-collateralized. After you take out all instruments that are senior to Stretch, we still have 5.6x collateral over Stretch. And so it's an over-collateralized instrument. And then after that, we've added $2.25 billion of US dollar reserves. So we have 2 to 3 years of dividend coverage. And I'd mentioned the liquidity of Stretch is trading extremely well. It's NASDAQ listed. It has a 4-letter ticker. It's easily accessible to folks. It's now accessible on Robinhood and Square Cash App and pretty much anywhere else that you can buy a security. Next slide. So let's talk about our balance sheet. I've seen a lot of questions. We get them from investors. We get them from shareholders. We get them from people on X. What's going on with Strategy's balance sheet? Are you worried that when Bitcoin price drops, that you are going to have issues with your convertible bonds? Are you going to have issues paying your dividends? You're going to have to sell Bitcoin? The short answer is I'm not worried. We're not worried. And no, we're not having issues. What's the reason? One, we have a BTC reserve that's $60 billion. This was as of last Friday. Now it's $45 billion. And our equity, our enterprise value still trades above
I'm not
our
worried.
Bitcoin reserve. Our convertible debt, that's the notes that
I'm not worried.
preferred equity doesn't come due, is at about 10% leverage. With the latest Bitcoin price as of today, we still have about 13%.
He doesn't believe what he's saying.
$8.2 billion that come
You're
due.
lying, bro.
Leverage. How do you think?
You're $20 billion. You're lying. You should just say you're worried.
Spend a lot of time in the debt
Just
world.
say
You
it.
might say, wow, 13% sounds like a lot. Let me show you how we compare 13% to the S&P 500 universe. Next slide. First thing is when you take your leverage, you take out the cash.
He's
that we have.
lying
So
to
our
my
net
face,
debt
to my
is $6
fucking-
billion.
you're lying to my fucking face.
As I mentioned, our net leverage is
Bong Lee's lying to my
10%,
fucking
and
face.
13% with the most recent Bitcoin price.
You think I'm a fucking
If you look on the
retard?
bottom left-hand side, this is how we compare to the S&P 500 universe.
You think I'm
Right?
fucking
We have
stupid?
10%,
Next
currently
slide.
13% leverage. If you're a AAA rated
You think I'm a retard? Next slide.
investment grade company, your bonds are trading as AAA rated, you have 23% leverage. If you're triple B
Stop swearing,
rated
please.
high
Yeah, my
yield,
bad.
you have
Next slide.
32% leverage. We have half the leverage of investment grade companies.
Let me get out of my lungs at break even, and I swear to fucking God, I'll never swear again.
How about looking at it by sector? Strategy at 13%. Looks
Sorry, I
like
don't
a
swear to
tech
God anymore,
company,
man.
which is
Next slide.
low capital, low assets, high income, right? They're levered at about 15.7%. Compare us to asset heavy, high debt companies and industries, utilities or real estate. They're levered at 42 to 48%. We are not a highly levered company.
We were not
Next
a
slide.
highly levered company.
What about our
What?
convertible debt, right? Not very highly levered, so that's good. But what happens when our convertible debt comes due over the next 5 or 6 years? Are we worried that we're not going to be able to pay back our convertibles?
Wait, listen.
No, not really. You see here the
Not
net
really.
debt of $6 billion compared to a Bitcoin reserve of $59 billion, now $45 billion. In the extreme downside, if we were to have a 90% decline in Bitcoin
We're down
price
50.
and the price was $8,000, right, which I still think is pretty hard to imagine, that is the point at which our Bitcoin reserve equals our net debt, and we will not be able to then pay off of our convertibles using our Bitcoin reserve, and we'd either look at restructuring,
just said the
issuing
number.
additional equity, issuing
He just said the target.
additional debt. And let me remind you, this is over the course of the next 5 years. All right, so I'm not really
He just said the
worried
number.
at this point in time, even with Bitcoin drops, that we're not going to be able to service our convertible debt. All that said, it's staggered over time. We have put dates between 2027 and 2032, and our plan is to equitize that over time. And if we're not able to equitize it, we'll find different ways to restructure the debt.
8K.
Next slide. Of course, we have this Bitcoin reserve, and what does it really do for us? It creates long-term durability. That's why we've been building it up. That's why we've added about 16% over the last 9 months to our Bitcoin reserve. It gives us long-term durability to issue more credit, ultimately. And as we issue more credit, the dividends will rise. Our dividends, as Andrew explained, $888 million. We have 67 years of dividend
8K will go to zero.
coverage
Next
with our
slide.
Bitcoin reserve. If Bitcoin goes up 1.5% a year, that's our break-even ARR, we could just sell the incremental Bitcoin that we get, not that that's what we'll do, to pay our dividends. So we don't need a large increase in Bitcoin price to be able to service our dividends primarily through Stretch. Next slide. Our US dollar reserve, which I'm very happy we put in place in Q4 and solidified in Q1, is $2.25 billion. That's 30 months of dividend coverage, 2.5 years of dividend coverage. So if we were not able to raise capital, which we've shown that we've been able to do through equity issuances, we could sit here, do nothing.
We're able to raise capital by
and
just like
pay
adding
off
supply to our
our
stock.
dividends.
Imagine if a
over-
crypto
or
company did that, by the way. Pump
satisfy
Fund
our
was like, we need more
dividends
money, so we're
over
just going
30
to
months.
launch more Pump Fund tokens,
Next slide.
add supply, then parasitic mode.
And as I mentioned, since we took,
Bro, where
we
is Sailor?
received the B- stable outlook credit rating from S&P, we've taken a lot of positive actions to improve this. Right?
This is so brutal.
Will the S&P
Sailor, please.
increase it from B-? I think if they were to make an evaluation today, they likely would, but they usually make evaluations every year or so. They don't want to move fast in terms of what the credit rating is, but we've added a US dollar reserve, $2.25 billion. I'll remind you that the first $1.44 billion we raised in 8 days. The second is we've been able to maintain a robust access to capital. We raised $9.5 billion in 3 months and 72,300 Bitcoin. So we've shown that we're highly liquid and able to access capital. And we paid dividends every single month, every single quarter since.
Say not negotiate with market makers to buy at 75K.
So what are we going to do to make Stretch even better? In addition to improving the credit quality, we've been working with brokerage.
I feel like if I was running this earnings call, I would come on here and I would pitch a thesis for what we're going to do about quantum and what we would do to make Bitcoin go up. Nobody cares about these fucking debt vehicles. Like, what are we doing about quantum? What's happening with the market right now and how is shit going to go up? Everything, all this is, am I wrong? All this is slop.
To help explain Stretch.
I don't even want to listen to this. Tell us what's going to make it go up.
Crypto. So just like you saw MSTR turn into MSTY, MSTU, etc., we're seeing Buck and other coins like Saturn, Apex, APYX, and TradFi platforms starting to launch products on top of Stretch. And we expect over time, Stretch will be tokenized, we'll integrate with ETFs also. All right, we've been involved in industry conference, leverage finance conferences, teach-in sessions, and so we're telling everybody about Stretch. And we engaged in digital marketing. You might have seen ads on X or YouTube or Wall Street Journal.
They don't get it.
We have strategy.com, strategy app, interviews, and podcasts. We want everyone to be aware of digital credit because we think it's an amazing product for an end investor. And we think it helps build the strategy flywheel and the
Trying to like
flywheel.
ignore the price.
Next slide.
If I was running this earning call, we would have started with the price of Bitcoin on the screen.
I do want to update a slight change to our Stretch guidance. In the past, we've said that we're going to base our actions on Stretch on a 5-day VWAP at the end of the month. what we found is that Stretch trades very interestingly around dates like our record date and our payment date. Our record date falls before the 5 days at the end of the month, and that's where we've seen.
Like, tell us why this is
people try to
overdone.
buy Stretch so they get in before the record date. So
Sailor gotta know about that.
View of Stretch price is to look over the course of the entire month. So the VWAP range by which we'll look at the price of Stretch and make determinations on what to do with our rate will be based on the entire month. So as an example, for January, if we were to have made that change in January, it would have been January 1st through January 31st. For February, it'll be February 1st through February 28th. Next slide.
It's got to be close.
So we talked about digital credit, and the importance of digital credit is what it does for a digital equity. Digital credit amplifies our common equity.
How many loops do they have to be jumping
no,
through to get a chart where MSTR is at the top?
Last Friday, as of today, MSTR is up 48% since we started this strategy. Bitcoin's up 36% since we started this strategy, and we've outperformed the Mag 7 Gold S&P 500. We're amplified Bitcoin designed to outperform Bitcoin, and our belief is Bitcoin will outperform every other asset class in the world over time. Next slide. How do we create amplified Bitcoin? How do we outperform Bitcoin? We produce Bitcoin per share. We increase Bitcoin
How do you
per share.
outperform Bitcoin? You
which
just
is,
stable up.
The change in Bitcoin per share is Bitcoin yield. And you look here over the course of the last 6 years, we've increased Bitcoin per share every single year. That's why we outperform Bitcoin. If you buy 1 Bitcoin at the beginning of the year, you'll have 1 Bitcoin at the end of the year. If you buy
what they're not addressing though is that they just increase shares as well.
2025, you would have had 23% more Bitcoin at the end of the year, 2025. We increase Bitcoin per share, and we call that increased Bitcoin yield. Next slide. So how do we think about this over the course of the next 7 years? I showed you what we've done in the last 6 years. The way we're going to increase Bitcoin per share over the course of the next 7 years is we are going to sell digital credit. And what does digital credit do? By selling digital credit, we generate amplification. By generating amplification, we increase Bitcoin per share. By increasing Bitcoin per share, MSTR common outperforms Bitcoin. It's a very simple formula. And what are the inputs? How much digital credit can we sell?
If we rip this right now,
how much Stretch can we sell? Here's an assumption that on a base of $60 billion of Bitcoin, if we can sell 10% of digital credit, which is $6 billion, this is what this might look like over time. And you say $6 billion, is that a lot or is that a little? Well, last year we sold $7 billion of digital credit, and we raised over $25 billion in the equity capital markets. So we think this is a fairly conservative assumption, $6 billion. This assumes a 10% dividend rate, which is where we are right now, and that we're issuing equity to pay for the dividend on digital credit at 1.34x MNAV, right? And so I'll call this a low scenario. If we have this low scenario over the course of 7 years, we'll increase Bitcoin per share 1.4x. That's a 5% annual Bitcoin yield. Next slide. What if we can do a little bit better? What if we can assume 16% of digital credit sales?
They're really not going to address the price of Bitcoin one time. How do you get through this whole call and not say the price of Bitcoin
the Fed
once?
lowers interest rates.
How is that possible? Their whole business is Bitcoin price. How is that possible?
Down to 9%. And what if the view of this causes investors to believe we'll increase Bitcoin per share and our MNAV goes up and we have amplified Bitcoin and MSTR, and we're able to get to 1.75x MNAV? This scenario with a assumption of 30% Bitcoin ARR gets us to a 2x.
Is this pre-recorded?
Bitcoin per share over 7 years, which is a 10% annual BTC yield. Next slide.
Because I don't look at price. Yeah,
what does a more aggressive scenario look like? Maybe we can assume 20% digital credit sales. We're able to drive the dividend rate down to 8%, and our MNAV goes up to 225.
Big Mike.
Then we can increase Bitcoin per share 2.5 times over 7 years and a 14% annual Bitcoin yield. That's another scenario. And I'll go to the final slide of my section. Ultimately, this is the strategy of the company. We're going to issue digital
final slide.
credit through
Thank
Stretch.
God.
We're going to amplify the common equity because of it. It increases our Bitcoin per share, and we outperform Bitcoin. What are the levers that we can play with? How much digital credit can we sell? How attractive can we make Stretch? How well do we market
Doing
it?
this
How
stream,
well
I'm
do
not
we
lying.
distribute
What?
it? With higher demand, we can lower the cost of credit, and we'll increase the MNAV.
One more slide, one more slide,
That's
one more slide, one more slide, please.
the thesis for the company, and that's what we're excited to do, and that's what we're going to focus on in 2026. So with that, I will pass it over to Mike.
Yes!
Thank you, Phong. I'm delighted to have you join us today. Why don't we go to the next slide?
Actually, keep your chart open.
All of our strategy is based upon looking at the fundamentals and taking a 10-year view.
Come on.
And so when you consider the fundamentals of digital capital,
Come on, Mike.
you have to start with the most important regulator in the entire world, and that is the President of the United States. We have a Bitcoin president, and he's intent upon making America the Bitcoin superpower, the crypto capital of the world, and the leader in digital assets. I don't think you can underestimate the importance of having support for the industry and digital capital at the very top of the political structure. Now, equally important, if we look at the cabinet that's been put in place on the next slide, you see the entire government is now embraced Bitcoin. And when I say embrace Bitcoin, what I mean is 18 months ago, there was one person in the government that had an awareness of it and was skeptical to neutral or grudgingly accepting of it. And everyone else in government was either negatively inclined or they were ignorant of it. And now there are 12 individuals I'd want to highlight here.
See this bedroom?
JD Vance, the vice president.
He's calling him out by
Bessent,
name, by the way.
The Treasury Secretary. Paul Atkins, the head of the SEC.
By name.
Number 4, Kevin Warsh, who is the Fed chair nominee, who understands digital assets, understands the use case of Bitcoin. This is a tremendous move forward for us, a big fundamental shift. That now you can look at the head of the SEC, the head of the Treasury, and the head of the Fed.
By name, he's going down the fucking
appreciating
line.
The pivotal role of digital assets and the growth of the country and the economy. And if you go to the second line, right, you see the head of intelligence, the head of the Small Business Administration, the head of federal housing, the head of health and human services, all Bitcoin believers. And then Michael Selig, the CFTC chairman, David Sachs, who's doing a wonderful job, Howard Lutnick, Commerce Secretary, and even Kash Patel. So if you consider that,
not good.
We went
All up
from
in them.
one neutral to a Bitcoin president and 12 positive constructive. This is great fundamentals for us. And I don't think we can lose sight of this because everything that follows in the marketplace is very much influenced by the political structure of the world.
Fuck, it's
on the next slide.
Gonna do it.
Capitol Hill has embraced Bitcoin. We've got bipartisan consensus that the United States should embrace digital assets, should embrace digital capital, should be a leader. That is not a debate. No one's saying that there's one party in favor of digital capital, another party against it. That's a big deal. So although the political
the only problem
process
with the pro-government take is it's down since Trump's in office.
We have moved from an asset which was a scary speculative thing and maybe illegitimate to a legitimate asset that most reasoned politicians and regulators and policymakers believe they need to move constructively forward with. Let's go to the next slide.
They gotta get a better slide guy. I mean, this is fucking ridiculous.
Big banks are embracing Bitcoin. Roll the clock back 18 months, and this Harvey ball diagram is pretty much blank, mostly blank. And so when you actually look at the top financial institutions and you ask the question, do they allow IBIT trading? Well, there's an avalanche of support there. That's flipped in 12 months. The second question is, do they offer credit against IBIT? That's a big deal. 12 months ago was almost impossible to get a loan or a margin loan against IBIT. Now there are many banks coming into space. Would they let you trade BTC? Now you have banks that are announcing support for that. You have banks announcing support to custody BTC, and you have banks announcing intent to offer credit against BTC. Again, This is an extraordinary sea change. We cannot underestimate the value. I think that the fundamentals of the industry are driven by the banks creating credit. One bank can create as much credit as all the Bitcoin miners can create in Bitcoin in a year. So each bank that turns on Bitcoin-backed credit lines might be the equivalent of another halving for the network.
Yes, I did
Let's
shit like that.
go to the next slide.
Leap, thanks for the gifted. Donate.gg. Shout out
TradFi and
donate.gg.
FinTech have embraced Bitcoin. If you look at the number of accounts with BTC trading asset, there's a pretty clear bullish trend here, both across crypto native exchanges, fintechs and neobanks, and the brokerages and banks and the wealth management channel. Those are large numbers. Fundamentally, we're going from an asset class that no one could buy if they wanted to an asset class where everyone is competing to facilitate access and exposure.
Leap, thanks for the 20 gifted. Donate.gg. I love you.
The next slide.
Donate.gg.
This is the ETF trend. ETFs are embracing Bitcoin. 125
This is
ETFs
good,
or
this is good.
ETPs launched.
But this is
1.4 million
this is
Bitcoin held
2025.
in them. A very consistent trend up and to the right.
Outflows are bad right now.
Next.
He's ignoring that, but this is 2025. Fair.
And this is the corporate trend. It was nothing in 2019. We were the first serious player. We were lonely for a bit. Then we went to 33. Then we were 64 in 2024, and now we're 194. This is clearly explosive growth, and there's a signal here. Next.
He's doing pretty good, but he's just saying the same shit.
The public markets are embracing Bitcoin. Look at these IPOs that have taken place this year. Bullish,
I need
Circle,
something new.
Gemini, BitGo, Kraken, that's coming. And then Coinbase, Block, and Robinhood have all been included in the S&P 500.
BB, thanks for 20 off
I
gifted.
see this as a very bullish indicator and a fundamental improvement in the structure of the industry.
Yo, physiognomy people, what does it mean? Posture change, body language change. What does that mean? Changes posture. What does that mean? What does that mean?
The concern du jour is quantum computers, and many people ask, do quantum computers represent a threat to Bitcoin? I would note that the quantum computing concern and quantum FUD is just the latest in a long litany and a parade of horrible FUD that has been taking place since the beginning of Bitcoin. There was functionality FUD. Bitcoin's not functional enough, so it will fail. It needs smart contracts. And then people thought it was a Ponzi. And then they thought it was too volatile. And then they thought well, there was a bug in it. And, maybe it'll be 51% attacked. Maybe the Chinese control too much of it. And then there was the Chinese shut it down. It was the opposite of the China FUD. It was the China non-embrace. And then we had all manner of block size wards and bandwidth FUD. And then there was it uses electricity FUD. And then there was the wealth concentration FUD, and then of course then there was another crypto will be better. What I would say,
please, man,
is whenever dealing with each of these concerns, we have to take them seriously. We have to consider them, but we have to remember two things. One, the two words on the back of the Hitchhiker's Guide to the Galaxy: don't panic. Most important two words, more important than everything in the encyclopedia or the Hitchhiker's Guide to the Galaxy. The second observation, the Hippocratic Oath: do no harm.
Oh my God.
And so whenever you're faced with a challenge in any system or any network, you have to make sure you don't panic. You're not railroaded into doing something foolish or destructive. And you also can't do something that causes harm. You don't want an iatrogenic intervention where the cure is worse than the disease. So our position on quantum computing: one, we think it's probably 10 or more years away before there's a threat. That is the consensus. It's a promising technology, but it's still nascent. Many industries, including finance and defense, are dependent upon traditional cryptography. They face the same risks. There's a significant global investment going into building quantum resistant protocols, not just in the Bitcoin community, across all communities. The Bitcoin community in specific is engaged on research and development in these efforts.
And we're funding it. And we're funding it. We're funding it. We're funding it. We're funding it.
Bitcoin requires an upgrade, there will be global consensus. Right now, there isn't global consensus that existing cryptographic libraries are at risk. And to stampede into a hypothetical fix before there is consensus would introduce new attack surfaces and new complexity and new failure modes that don't currently exist. It's very similar to over vaccinating. When it's like, well, there's a 0.001% chance that the kid might get a disease. So we're going to vaccinate them just in case. But of course, 3% of the people that get the vaccine have side effects, right? And so it's very important that we don't over insure, over vaccinate, over treat, over worry. So famous president of the United States, he said, if you see 10 problems driving down the road, 9 of them will probably drive themselves into a ditch before they get to you. So the one thing you can't do is you can't buy 100 expensive insurance policies that cost collectively 100% of all your operating income to insure against something which is 2% likely to happen. That's why you have to be very thoughtful about addressing these risks, and you have to address them at the right time, not too soon, not too late. But because too soon, you probably don't have the right technology and you're over insuring. Too late, right? You accept the risk that you shouldn't. That's why consensus is very important. Bitcoin will be stronger if and when that quantum upgrade takes place, right? And so Bitcoin is upgradable, and Bitcoin can be upgraded to be stronger. And we, of course, are optimists, and we believe that the human race will accept challenges and will upgrade to meet those challenges and do it in a rational fashion. And Bitcoin has a history of meeting challenges in a rational fashion such that it is stronger. And you can see all those examples. Last, but probably most important on this slide, strategy, we are going to initiate a Bitcoin security program that coordinates with the global cybersecurity community, the global crypto security community, and the global Bitcoin security committee in order to help and contribute to consensus and solutions to address the quantum computing threat, as well as any other emergent security threats that evolve. We think it's reasonable and appropriate for us to do this, given our large responsibility as a Bitcoin holder, but we want to do it in a very responsible fashion. And we want to make sure that we coordinate with the global cyber, crypto, and Bitcoin security community, because there are a lot of very, very brilliant minds here. There's a lot of good work being done, and it's likely that consensus will form and solutions will form at the right time in a responsible fashion. So that's our view on quantum. Next slide. Digital credit. Our company existed we structure and we secure Bitcoin.
Yes!
Right, we're a digital credit
Mike,
issuer.
yes!
If you look at this chart, what you can see is that the native volatility, or the natural volatility of Bitcoin, is about 45. For a 45 vol asset to draw down 45% shouldn't shock anybody.
He's watching a 1-minute chart.
Looks like it's drawn down about 45% since its all-time high 4 months ago. So
yes,
45%
bro.
drawdown on a 45 vol asset is probably to be expected, just like an 80% drawdown when it was an 80 vol asset. On the other hand, what you can see pretty clearly is that strategy has stripped that volatility off of BTC with Strike, which was 32%, Stride 27%, Strife 24%, and Stretch down to 7%. Wow. So we are stripping the volatility.
Dude, he gets the fucking game. Get the other retards off the mic and just give it to Big Mike.
Volatility, and so the volatility that we strip
like an
off
hour.
Of the credit instruments accrues to the common equity, and so that's why MSTR 63 vol. But it's not really a complicated piece of engineering. It is just It is very pure financial engineering. There's a group of people that want low vol, principal protected instruments that are credit instruments, and there are other people that want high vol, high performance.
Sailor claim fees.
Next slide. Right, think of us as a digital credit vehicle. Our job, we are thrusting forward. We are actually moving through space through issuing digital credit. Right, it's digital credit is the product. Bitcoin is the backing collateral. The secret or the most important thing for us to do is to build the vehicle in the most robust, fault tolerant way that we can, the most scalable way we can. You could think of it as a Bitcoin battery and then a US dollar battery. And we have lots of options. We have options to run on the US dollar reserve. We have the option to sell equity. We have the option to sell Bitcoin. We have the option to sell Bitcoin derivatives. And we keep our options open so that we can do the best thing for all of our stakeholders. Our common stock shareholders, we want to do the right thing for the MSTR common stock shareholders. We want to do the right thing for the credit holders of the digital credit instruments. And we want to do the right thing for the Bitcoin community. And we believe that if we're rational and thoughtful, then we get a good outcome, which is BTC positive, MSTR positive, STRC positive. Next slide. Companies exist to convert capital into cash flows. In essence, you have capital investors and you have credit investors.
You just say we have the option to sell Bitcoin on national television while it trades at $63,000.
And the capital investor gets $1 million of real estate with no cash flows for the next 30 years. And maybe they'll get more than 10% a year. Maybe they'll get 20, 30% a year performance. But it's pretty straightforward that the world's built on capital. The world runs on credit. BTC is digital capital. STRC is digital credit. It takes an operating company to transform capital into credit. If we were a real estate development company, we could take $50 billion of capital, buy a bunch of land in New York City, build a bunch of buildings, market the buildings, rent the buildings, and generate cash flows. That's a way to do this. But you take on all sorts of liability, all sorts of counterparty risk, operating risk. It takes a lot of time. You have property taxes, employment taxes, income taxes, usage taxes, etc. That's the 20th century way to actually create credit from capital. We've taken a much faster route. We would just take the money, buy Bitcoin, and just issue the credit, and we skip all the intermediate steps. That makes us extremely technically efficient. It makes us extremely economically efficient. It makes us extremely tax efficient.
Why would you say they have the option to sell Bitcoin? Why could you just skip that? What was the point?
At the core, what are we doing, right? We're transforming that capital into credit. We're taking BTC and we're converting it into a currency, whether it's a US dollar or a euro. We're stripping the risk by over collateralizing it, right? If you have $5 of Bitcoin, right, and it falls by 80%, then you've got $1 of Bitcoin. But when you have $1 of STRC backed by $5 of Bitcoin and it falls by 80%, you still got $1 of STRC backed by $1 of Bitcoin. So we're stripping or reducing the risk by the BTC
fucking hated what he said. So am I dumb or you?
And then we're also taking other actions to reduce risk, right? We're an operating company. We can raise capital. We can sell equity. We can refinance. We can strip risk by taking a 2-year obligation or a 10-year obligation and stretching it out to a 20-year.
I'm just happy he addressed the quantum thing.
So operating companies can do these things. We're also damping the volatility.
Sachs, thanks for the gifted.
We damp the volatility by building the collateral, by building the US dollar value, by adjusting the dividends, by adjusting the ATM programs, by adjusting our capital markets behavior. And we adjust these things minutely every minute, maybe even every second. Right? We have programs to adjust all of our activities so as to damp volatility. And we're very engaged and we're very focused on it. Of course, and then we distill the yield from the capital asset in order to create a fixed income yield rate. And of course, we're compressing the duration. Instead of telling you to wait 10 years in order to get a 30% return, we're giving the 18-year-old cash flow this month and every month. So
What?
10 years of duration is 120 months. We're converting 120 months into 1 month duration. And so when people say, what does the company do? The company transforms digital capital into digital credit. Are these things valuable? Of course they're valuable. There's a $300 trillion market for credit. It's extraordinarily valuable. And the key is for us to create the best credit in the world and to create the best credit you can using digital
Yellow
capital.
line is where the stream
Let's go to
started,
the
by the
next
way.
slide.
Price when Sailor got on. It's yellow line.
How do we benchmark ourselves against the other credit alternatives? Well, the bank accounts might give you 40 basis points. The money markets are giving you 360 basis points. Taxable. Insurance companies don't pay tax and endowments don't pay tax, but actual real people, families do, private companies do, public companies pay tax. The world's full of people that have to pay tax. And so 360 basis points of money markets, works out to might be only 180 basis points if you live in New York or California after tax. So
Dude, he's got to lock back in.
clearly what we have here is a yield-starved environment. The base rate and the risk-free rate is 360 basis points taxable. And that means that all the conventional credit instruments are pegged to that, like mortgage-backed securities, investment-grade bonds, junk bonds. They all trade at very small premiums or spreads over that risk-free rate. And STRC is paying 11.3% at par, 11.25% at par. And so you can see here that it's
What do you think his investors are thinking right now watching this? Panicked
more
or no?
on a pre-tax basis.
Are his investors panicking right
On a
now?
tax equivalent basis, it's like a bank account in Miami that pays you 18%.
Probably, right?
It would
They
be
have to be.
much more. It'd be like a bank account that pays you 22 or 23% in New York City or San Francisco. So we think we've been able to create a very compelling credit instrument versus other credit instruments. It's just 2 to 4 times better. And let's go to the next slide. We don't just benchmark ourselves against other credit instruments. We also benchmark ourselves against all the other non-US dollar currencies. And what you can see here is the US dollar has got a 370 basis point risk-free rate, but the Korean won, the Canadian currency, the euro, Singapore dollars, Japanese yen, Swiss francs, they're much weaker. And so fundamentally, you could think of the
Sure, thanks
stretch
for the
rate
gifted.
as the risk-free rate in the Bitcoin
Jerking?
ecosystem. It's like the Bitcoin rate, short end of the yield curve. So we are working to define the yield curve. Like if you're willing to accept no guarantee of yield and 10-year duration, then you get the Bitcoin rate.
I just like, bro, we don't want yield on
right
Bitcoin.
now,
I don't want 4% yield.
35-40%.
Accepting locking your Bitcoin at a shit price for 4% yield is just sacrificing the volatility, which is why we're here. Why would you do that? Why would you give up your Bitcoin for a couple percent yield? It doesn't make sense. It's like the sacrifice of doom.
Just a very compelling opportunity. Clearly, we believe the killer app of digital capital is digital credit. And, oftentimes people joke, it takes 100 hours to understand Bitcoin. Maybe it takes 1,000 hours to become a Bitcoin maximalist. It only takes 10 seconds to understand Stretch. Stretch is 11.25% dividend yield paid monthly. That's it, right? It's a 10-second idea. Let's go to the next slide.
That was kind of cold. That was cold as fuck. I'm not gonna lie.
Okay.
That was sick.
Here's an actual 4-month snapshot.
That was sick.
And this is an interesting comparison, Stretch versus Bitcoin. What's the difference between credit and capital? Well, in the last 4 months, Bitcoin has traded down 30% through the 1st of February. Stretch is up 1%.
Ignoring the last 3 days.
It doesn't take a rocket scientist to look at this chart. If you're a retiree, if you're a corporate treasurer, if you're a fixed income investor, if you're any kind of investor, and you look at these two charts, if you're crypto curious or you think you might like Bitcoin, you look at this and you think, well, I like it, but I just can't stand the vol. You can see why. Do you want 30% drawdown and no dividends, or do you want
He's like shilling
1%
against
price
Bitcoin. This is like
appreciation and
so.
5.3% paid dividends with an ongoing
Gee, I guess just
11.25%
keep
dividend
talking,
rate?
right?
And with the company that's making a commitment to stabilize that price to target 100
Crypto
and
curious
do
don't
whatever
sound
it
right, by
takes,
the way.
including raise the dividend. So we believe that
Crypto
what we're
curious does
doing
not
is
sound right at
expanding
all.
the market. We're bringing new
You gotta
capital
stop saying
with
that.
new forms of investors into the digital asset space. And we're creating sort of a gateway product or an on-ramp to digital assets and digital capital by way of STRC.
No, I won't buy
And
this
of
shit.
course, we're still very early on. This is like, the first 5 months of seasoning of STRC. We think that after 12 months, we'll have a better picture. And clearly, in some cases with credit instruments, people have to see it for 2, 3, 4 years before they actually want to buy it. So we think that STRC is going to continue to season, continue to harden, continue to stabilize, continue to build AUM, build liquidity, and we will continue to make progress on volatility, over the coming 2, 3, 4 years. So it's a very straightforward exercise on our part.
We gotta be
This
wrapping
is
up
the
here.
flagship product of the company, right? At this point,
Gotta be wrapping here.
everything we're doing in the capital structure is to improve the liquidity, decrease the volatility, increase the AUM, increase the credit worthiness, decrease the risk, improve the standing of Stretch,
Why is he talking like that?
right? And you
Why did he say it like
you
that?
can extrapolate what that might mean with everything else that we do going forward.
Why did he say it
Let's
like
go to the
that?
next slide.
Why did he do that? That was
Here's a
weird.
picture of that volatility, right? We started with a higher vol, we're working it down. We do things like create the USD reserve, we adjust the dividend rate, we do no harm, we don't sell it if it's
That
not
was
at our
weird.
target.
I don't
I
like
mean,
that. I
all
didn't
of
like
these
that
things are
at all.
active
I did not
decisions
like that.
every day, every minute of the day. Next.
That was weird. I'm even comfortable.
And we're pleased that we are building the AUM. It is scaling. And, it's not going to be a straight line up and to the right. We're going to have good months. We're going to have great weeks. We're going to have bad weeks. We're going to have bad months. That's okay. We're in this for the long term. By the way, the long term means 4 years is the short number, 10 years is the target number, 7 years is the middle, right? So as Fong pointed out, we're looking out 7 years thinking, well, if we do what we're doing, we can double Bitcoin per share over 7 years if we execute well. And then we're looking at this over that 7-year time frame and thinking about how we actually make this into a truly the greatest credit instrument in the world. Next slide. Fong had alluded to the fact that it's much more liquid. I think Stretch traded something like nearly $300 million today, or, a huge number, right? And it's
Say the chair
trading
thing.
consistently above 100 million. That's unheard of. A lot of people list prefs over the counter, they trade 100,000 a day. And then they publicly list them, they trade 1 million a day. So these things in the first 12 months are already off the charts by a factor of 100 more. And Fong noted, but we didn't dwell on it, we were 33% of the preferred stock issuance last year, right? We are transforming the preferred equity markets. We're digitally transforming them. We're just like we revolutionized and shook up the convertible bond market until we were the largest convertible bond issuer. We're now shaking up the preferred equity market and becoming the largest preferred equity issuer. And it's because we're putting an innovative
These
asset
calls are brutal.
together with an innovative security,
This is a
together
one-time thing
with
for me.
innovative business strategy and the way we manage our ATMs, the way we manage our company.
It's brutal.
Next. This is a chart we're very proud of. Even though Bitcoin has struggled. If you look at the Bitcoin price, we've been increasing the BTC rating of Stretch even as the Bitcoin price has been falling, right? So we're increasing the collateralization of this. We're decreasing the risk of this, and we're doing it through programmatic,
Where's the sweater?
thoughtful risk
Scan bar.
management on our balance
Yeah,
sheet.
DM me that link, the YouTube link, my friend.
Next slide. Bitcoin is at 43 ARR, 45 vol asset, digital credit, stretches 11.25%, 7 vol. It might jump up to 10 vol sometimes. Maybe we get it down to 5 vol, 4 vol, 3 vol, 2 vol. I don't know where we'll get it, but it seems like it's going to be single digits. And then the third layer is digital money. Our view for that is less than 1 vol, 0 vol digital money. Can we actually create something that pays 6 to 8% that's got 0 vol? We can't do it ourselves. We won't do it, but we welcome partnerships with other companies, with ETFs, with TradFi projects, with banks, with crypto token projects. I mean, a lot of other people can use Stretch and they can step it down. They can make it 80% Stretch, 20% cash. People are going to stretch down. They're going to lever it down. They're going to lever it up. They're going to mix it. They're going to manage. They're going to actively put in management and volatility buffers and liquidity buffers, and put it in various
Almost at the
regulatory
Q&A,
containers.
but I don't know if I'm gonna make it.
Next slide. Right, you can deliver digital money as coin, like a savings coin. You can deliver it as a fund, a private fund or a public fund, an ETF, or you can deliver it as an account on a crypto exchange or a bank. We welcome all those partnerships. Our view with Stretch is we're going to market it to the general public. We're going to market it to credit investors. We're going to market it to enterprises. We're going to market it to corporate treasurers and corporate CFOs, right? We're going to offer you 2 to 4 times more than your existing treasury strategy. And we're going to also work these OEM relationships in order to build great partnerships so people can create insanely good digital money products based on our digital credit. Next slide.
Dude, how many more fucking slides?
Quick review of illustrative models. We're looking out 7 years. And so, one model is we target 5% BTC yield and we increase Bitcoin per share by 1.4 over the 7 years. The mid case is we target 10% BTC yield. Let's go to that slide. Yeah, 10% BTC yield. In that case, we'll double Bitcoin per share over 7 years. And the high end would be a higher yield than 2.5x Bitcoin per share. What is our objective? Our objective is to double your Bitcoin per share, right? Over 7 years, right? I mean, I would be disappointed if we don't double Bitcoin per share over a 7-year time frame. This chart actually shows how the amplification works in practice. By selling digital credit, we create an amplification. So if Bitcoin ARR was 10%,
I think Tom Lee's gonna ask a
we could
question.
achieve a 12 to 19% ARR.
Dying. You want me to keep going?
If Bitcoin was a 30% ARR, we could achieve a 36 to 45% if we execute on our strategy.
Fried brain.
So clearly, the equity is for vol junkies and performance junkies. They want to outperform. This is how we believe you can best outperform Bitcoin in the most responsible fashion while doing the most good for the world. And for the other end of the spectrum, for the credit investors that can't stand the vol,
apparently
they
questions
want
supposed to start like an hour
principal
ago.
protection and low vol and no currency risk, and they want clear yield and they want tax efficient.
Okay, thanks for the DM, bro. I
treatment.
can't watch it right now, obviously.
Then they have digital credit and Stretch specifically. Let's go to the next slide. So I would end with this thought, right? Bitcoin is digital capital. We believe in it. We will continue to advocate for it. And for the pure capital investor, you should buy it. Stretch is digital credit. If you don't know what you want, but you believe in digital assets and you believe in digital capital, you probably want Stretch. It's 11.25%.
Imagine selling quantum
dividend
resistant
paid
BTC at
monthly,
64K.
tax
I'm
deferred.
dead.
If you're a corporate treasurer, if you're a retiree, if you've got money that you need 3 months from now to pay your kids' tuition, but you want to invest it in more than 2% after tax, well, then Stretch is an option for you, right? So Stretch clearly is the flagship product. And
I don't want to hear
if
about
you
Stretch. I
believe
want to hear about
in the
Bitcoin.
future of digital
I
credit
want to learn about
and
Bitcoin,
you
not
want to
Stretch.
invest in
Bitcoin.
the company that is making it possible, then you would buy our equity. And if you do that, you should probably have a 7-year time horizon because we're long-term thinkers. Every day is not going to be a great day, every week, every month. If our thesis is wrong for 100 years, the equity won't work and we'll run out of money to pay the dividends at some point in 100 years. If our thesis doesn't work for 10 years straight, if that doesn't work, then the credit will get paid, the dividends will get paid, the equity won't be a great investment for you. But if we actually execute and if over the next 7 to 10 years things work out fine, the company is well managed, well collateralized, and responsibly structured so that we can stand difficult months, difficult quarters, even difficult years
Oh,
or
wait,
2 or
100
3 year
years,
cycles
dog. I'm
at a time. We've done
24.
it before
I'm going to be
and we're prepared to
124.
do it going forward. So with that, thank you. And I think I'll pass over the floor to open Q&A.
Oh, thank God. All right, let's go. Hit some. Oh, okay.
Thank you, Michael. We are now going to proceed to the interactive live Q&A
Why Tom Leo's
section
got
of
a
our
turtleneck
webinar.
on?
I would like to welcome
Take
all
that
our
shit off.
Q&A guests and invite them to come on video. We look forward to hearing your questions. We will go one at a time and I will call your names and you can direct your questions to the management team. So for the first question, I would like to invite Lance Vitanza, our research analyst from TD.
Thank you all for taking the questions and for the call. My question is, since the beginning of the year, I can count 3 weeks over which your Bitcoin acquisitions have generated negative, slightly negative, but negative Bitcoin yield. Now, I'm all in favor of buying Bitcoin even when times are tough, but shouldn't the goal be to increase Bitcoin per share at all times rather than just increasing the total amount of Bitcoin that you own? And
What is this
maybe
Twitter
if you could
ass
just talk
spaces?
about
Get
the
this dude off the
strategy or
stage.
the thinking that went into those 3 particular weeks and what that could mean going forward.
Yeah, we agree with you. We don't aim to reproduce those weeks. The times that we've actually done dilutive transactions on a Bitcoin per share
Tom Lee better
basis
say some
were
dumb shit.
if you go back to the crypto winter when we had to recapitalize some toxic debt on our balance sheet, we took out debt. Either
Why am I
was
not
like
on this call, by the
asset-backed
way?
loans or senior debt that had EBITDA covenants that we felt were crippling the company's growth
I could get on the
prospects.
stage.
And
Maybe for next one.
so
I feel like I
we
belong on
didn't
this
do
stage.
it
Let's
enthusiastically.
just say, like, can you go more in
but
depth
we
about your
did it
strategy for
because
quantum
over the
resistant
10-year
Bitcoin?
time frame, we knew we
64K.
needed to
I
remove
fucking would
those
crush
toxic
this.
elements to our balance sheet. If you look at these 3 weeks, when we took actions that were somewhat dilutive, they all were generally
Mr. Saylor, did I
with
hear you
building
say
up the
quantum
US
resistant
dollar
Bitcoin?
reserve. And we did that
Ask good
in
fucking
response
questions.
to analysis and feedback from the market and some reflexive concerns that we wouldn't
Tom
be
Lee in
able
a
to pay the
Russian
dividend
dungeon.
if the equity capital markets closed to us. So we wanted to get ahead of that and address the credit quality. So the reason we did it, and the short answer is we do it to improve the credit worthiness of the company. And if we felt that there was a credit problem, we would do it. Right now, we feel that we've built the US dollar reserve to the level where we don't have a credit problem. We're good for the next few years. We don't have any of those other forms of debt, the senior debt or the asset-backed lending. So the balance sheet is in much better shape today. Going forward, we wouldn't electively or programmatically issue equity to buy Bitcoin.
By the way,
if there was
basically
going to
every
be
person on
decreased
this
Bitcoin
panel
per
is
share,
in the red buying
right?
Bitcoin.
We don't think that's a good
for the sake of the
idea.
conversation.
We would only take those actions when we feel like it's essential to defend the credit of the company, because if people lose confidence in the credit, then that will ripple into losing confidence in the equity, and then losing confidence in the business model in general. So it's a practical consideration, but
No
I don't think
follow-ups,
we
please.
expect to see anything
Please, no follow-ups.
of that magnitude going forward, because the first $2.25 billion of US dollar reserve was a big move.
And just if I could just get a follow-up
No.
question regarding that $2.5 billion cash reserve. Could you, in theory, could you use that if you chose? Could you use that to redeem the $1 billion of converts that are puttable in September of 27?
Yeah, we could. We could use it for any corporate purpose. We could use it to pay dividends. We could use it to meet a credit obligation. We could use it to pay interest on a loan. We could use it for whatever.
Thank you.
Great. Thank you, Lance. For the next question, I would like to invite Tom Lee from FundStrat and BitMind.
Hi. Thank you, everybody.
Let's go, Tom. Come on.
Really useful presentation. I took a ton of notes.
I'm sure you did, Tom.
But I want to ask you a two-part question. I apologize. It's two parts. On slide 53, you talked about quantum vulnerability of Bitcoin.
Yes.
And
Tom.
and I apologize. I know it's getting a little nerdy, but I know a lot of people have questions about quantum vulnerability because, of course, Bitcoin could upgrade its network. But I know there's three types of wallets that remain quantum vulnerable. One is Satoshi, because he used a pay-to-public key, a really old wallet. And then anyone who's sent Bitcoin reveals their public key. And then, as you know, the Taproot wallets actually are somewhat quantum vulnerable. So I think that's like 25 or 30% of all Bitcoin.
This is not good for
ETH,
ETH, bro.
So the part one question is, I know MicroStrategy is a security expert. You have so much experience in security. Could you give us some idea of how Bitcoin and the core developers might think about addressing the quantum vulnerable wallets?
Come on, Taylor. It's a layup.
But the second part
is it's a layup.
That's really a small part of the story, because there's 4.4 million. There's only 4.4 million wallets that have even $10,000 worth of Bitcoin, which means whereas there's almost a billion accounts globally that have $10,000 of stocks, bonds, or cash, meaning the world hasn't really adopted Bitcoin yet.
Dude, it's not good for ETH.
As you think about the rest of this year, could you give us like what you think are some milestones or roadmaps that further drive Bitcoin adoption, which in turn help the price of Bitcoin?
Come on, Taylor. Ask him to repeat it.
So with regard to the quantum question, I don't think it's appropriate for us to advocate a particular solution or a particular approach, nor a particular time frame. I think that our role is to support all of the various communities and facilitate the evolution of consensus about what should be done, how it should be done, when it should be done. And I think that if you accelerate those and pressurize those processes, you end up solving a bunch of problems that don't exist in a way that maybe are iatrogenic. So we don't have a particular set of policy points that we wish to advocate right now, nor do I think it's really responsible or appropriate for us to do that.
I don't.
I think that that will be emergent. Exactly what should be done. By the way, it's not clear anything should be done ever. It's quite possible we'll actually pop out. You remember, the world was going to, end in climate change, death.
Look at this.
26 years ago, and 26 years went by, and none of those things happened. We were going to, Bitcoin was going to boil the ocean and use all the energy on Earth as late as 2018, and that never happened. So it's possible that whatever happens in the quantum domain will actually improve the security of the Bitcoin network inadvertently before we have to even discuss a protocol change. So I don't think there's any particular policies to be advocating right now other than to support all the various communities and facilitate consensus at the right time to do the right things. The second topic is really what are the catalysts for Bitcoin price to improve? Look, I think the fundamental catalysts are regulatory support. We have the most constructive set of financial regulators in the history of the industry right now. The head of the Fed, the head of the Treasury, the head of the CFTC,
It's not good for
the head of
E.
the SEC, and the White House has a digital assets czar, right? Those 5 things are massive
Like, bro, you think this shit's a
full
fucking
flags.
game?
They're all
Huh?
very positive,
It's just not a game.
and generally
Like,
you
this
would
is not
expect
good
that
for
something
anyone.
good will come probably out of the CFTC or the SEC as they are constructive
Probably somehow
about
down more, by the way.
facilitating financial companies to innovate in the digital asset space, right? I would have been skeptical about that 2 years ago, but I think for you to be skeptical about their support for digital innovation today would be ignoring all the words from everybody in those positions. And I think that the second catalyst will be banking adoption, the formation of the banking credit networks. As the large banks and as companies like Schwab, they start to allow you to trade Bitcoin, custody Bitcoin, borrow against
You almost said
Bitcoin.
crypto.
They're going to legitimize the asset, and they're going to decrease the volatility of the asset. They're going to improve the usefulness of the asset. You know, you're aware of the announcement of the BlackRock Bitcoin Volatility Income Fund that came like about a week ago, where they said they were going to sell volatility or generate income. And there's a lot of people that speculate that will decrease the volatility of Bitcoin and put a more stable floor into the asset. So I think the actions by big finance, the actions by the big banks, and the actions by the financial regulators are the fundamentals. I mean, those are the fundamental things. And if you were to light a candle and pray, you know, to the gods of the crypto sphere, you know, you would say, I want pro digital assets regulators, I want pro digital assets banks, and I want pro digital assets financial innovations like BlackRock's
Who's this
bringing to the
guy?
market, like we're bringing to the market, right? You know, like STRC. But fundamentally, the industry is going to move forward because of enlightened
Oh,
regulation,
man.
engaged, thoughtful banking, and then innovative finance. And that's what we're doing, and that's what we see right now.
Physiognomy on this panel
Great.
is
Thank you,
brutal, by the
Michael.
way. Thank you, Michael.
Thank you, Tom. For the next question, I would like to invite Pete Christiansen from Citi.
Thank you. Good evening. Michael, I want to talk about events of the last week. On Friday,
Yes.
the president presented his nominee for next Fed chair, which exacerbated volatility across a number of asset classes, including Bitcoin. The good news is Kevin Warsh is on the tape noting that Bitcoin is the new gold. So
Sort of.
So
that's not
good.
true.
But I guess my question
That is not true, but
how would Strategy's capital allocation framework, or possibly if it would change, if the next Fed chair is perceived to be less independent, perhaps maybe more tolerant of fiscal dominance, that may raise Bitcoin prices short term, but longer term, it may introduce increased rate volatility, which may be a challenge on the funding side. I'm just curious if you have any perspectives on how that might change the capital allocation framework for Strategy. Thank you.
good question.
We try to be very reactive to market signals. So for example, when our equity trades weak, we don't sell it. When our credit instruments are trading weak, when the cost of credit is too high, we don't sell them. You know, the most obvious is STRC. If it trades below 100, we don't sell it. So in periods where the marketplace loses confidence in our particular credit instruments, we simply wait. And you know, in periods when, you know, when the
just wanna hear Lynn
MNAV
Alden
of
ask
the
a question, but I'm
equity
probably done.
explodes
I'm
to
down to be done with
3
this in a
or
minute.
3.5,
I got nothing
we
left.
might sell $1 billion a day, right? So when the capital markets are enthusiastic about either the equity
Lynn Alden,
or the
last question, I'm
credit, we
done.
react to them. And it's above our pay grade to set financial policy. It's even above our pay grade to interpret like the financial policy.
guy
Like
smile.
sometimes
Good fucking question, bro.
the macroeconomy has one set of numbers and you would think it's good for Bitcoin, but it's bad for Bitcoin. Or another time you would say, well, if they do this, that should be good for us, and it's not good for us. And then other times it's the opposite. I think the nice thing about our business is we have the option to do nothing, and we have a set of disciplined capital markets programs. They've moved from being discrete, where it's like, well, we got to do a deal this quarter. What's the deal we're going to do in Q3? And we've moved from discrete 144A capital markets programs to continuous ATM type programs. And with the ATMs, if the market thinks that the cost of capital on an instrument like STRF should be 11%, well, we just don't want to sell it. So we think it ought to go to 8%. So when the market takes STRF to 140 or whatever the price it is that we think is fair, then we will be open to issuing more.
Carnage.
And when
It's
the
not just
market
crypto,
is
bro.
bearish on those instruments, we
Wow.
don't. And the good thing about the business is if you think Bitcoin is going to grow, fill in a number, 30% a year, then our option is just do nothing. And we're a company that's a $45-50 billion company growing 30% a year. So that's our default. Our default, if you think Bitcoin's only going to grow 10 or 20% a year, our default is we just do nothing and we grow at the rate of Bitcoin, and we're okay with that. And then if we think that there's something very accretive,
why is he making his face?
that's going to be good for the shareholders, then we will participate. And we can participate, in size $1 million a day, 100 million a day, $1 billion a day. And the truth is, Pete, sometimes we get up in the morning and we basically set up our programs and we think, well, nothing's going to happen today. And then 5 minutes before the market closes, a lot of stuff happens. Like it can literally change in 60 seconds. And again, that's beyond, our control. We can't control how the markets will interpret all these things. What we can do is set up a rational set of credit structures so that we only issue credit when we think it's in the best interest of the company, and we only issue equity when it's in the best interest of the company.
Thank you, Michael. Fair and helpful comments.
Thank you, Pete. For the next question, I would like to invite Lynn Alden from Lynn Alden Investment Strategy.
Thank you. Last question
Thank
for
you
us.
for the opportunity. Given the popularity of STRC, my question is focused on that. The company established that USD reserve, which I think shored up the confidence of these products and make them more attractive. Right now, the USD reserve is on the website 30 months of coverage compared to the dividends of the preferreds. The other preferreds are fixed dividends. STRC is a variable dividend, which introduces some degree of uncertainty around how many months of coverage there are for the total amount of dividends payable. Do you have any kind of views on what you think is an appropriate minimum reserve relative to months of dividend coverage? Or do you have a kind of a maximum that you'd be willing to pay on a dividend for STRC? And then a related question is, we are seeing some kind of early financial products that are out in the market that are looking to potentially leverage STRC, given the goal of low volatility and high yield. Are you monitoring the space for leverage built on top of that as it could contribute to spikes of volatility should there be an issue in the market? And do you have would you encourage that kind of thing, or would you dissuade leverage from building on top of that increasingly kind of a popular product? Thank you.
I can start, Lynn. Thanks for the question. First, we said that we target 2 to 3 years of dividend coverage with their US dollar reserve. So we wouldn't want it to go below 2 years. I think 3 years would be pretty high. And as far as whether we think there's a cap to the stretch rate, we're pretty early on and we're sort of trying to understand what happens every single month at the end of the month. And that's why we have our guidance that we have, right? It's at 11 and a quarter. Could we take it to 12 potentially?
Y'all good off this?
But it's going to be a function of how do we keep the price within a
I'm good if y'all
range, right around that $100.
Should we call it?
And also a function of what happens to interest rates in general.
Yeah.
But I don't think we have a cap right now.
I care about Bitcoin, not STRC.
Plays out over time.
Left the webinar. Hopefully they got a notification the right guy left. The guy said he's bored. All right. Well, look. Some of the YouTube comments are insane. That's the stream today. That's earnings. That's MSTR earnings. And yeah, I don't know. I mean, we got a take on quantum, which was fun. Finally, he said they actually shouted you out. You missed that. They addressed quantum, which is nice. But at the end of the day, I mean, look, here's the deal. At the end of the day, we're in this spot where we don't really know why Bitcoin is slicing through every level. We don't really have any clarity on this. And I'm going to be completely honest, until further notice, I am going to take the side of Bitcoin as an industry is not dying a slow, siloed, lonely death, and Bitcoin is sniffing out weakness across other markets, specifically TradFi, and there's potentially pain to come. I don't know how you could look at this any other way, honestly. I really think it's like one of the two. I think it's one of the two, and Bitcoin calls bullshit on how everything else is trading. And that's kind of like a scary thought, and I don't really know what it means. I think if you're long right now, be fucking careful. And if you have cash right now, it's probably not the time to be a hero. And I think if there's any solace that you could find in this, it's that no one has it, that the stock guys are in shambles. The metals guys are in shambles. Silver's $66. Like, you think Bitcoin's bad? How about this? Imagine getting whipsawed around like this. Look at this, silver futures. Imagine you got whipsawed around like this. I mean, this is crazy. All the way up, then all the way back down, and no, you're getting whipped around. Silver is getting whipped around. It's down 45% in 7 days. 45% in 7 days. Down 45% in 7 days after running up from this exact price, 81% in like 2 weeks. So the whole market right now is in shambles. And in my humble retard opinion, the metals move into dump, the crypto dump, and everything else that's happening right now is kind of calling bullshit on equity outperformance. It's calling bullshit on Nvidia price. It's calling bullshit on SPY. It's calling bullshit on all. I don't know. That's the only thing I can make of this. It's calling bullshit on everything. Amazon just got crushed after earnings, after hours. Nvidia's getting crushed right now. Everything's in a weird spot. And so, look, we have entered every man for themselves. Don't listen to your fearless leaders. They don't know what's going on. Hold on for dear life. No matter what happens from here, whether we just reversal right now, whether crypto data slow death by its or fast death alone, or everything is being called bullshit on and there's more pain, there will be money off the floor to pick up at some point. And we're going to be on Monday through Friday every single day while this happens. We're going to find the spots and we're going to pick the money up off the floor when it happens. Whether it's today, tomorrow, next week, next month, next year. I really believe that. I really believe that. And so the only thing we can do is sit here and stay like hyper locked in on what's happening in the market. So that's what we're going to do. I'll see you tomorrow at the same time. I think tomorrow is going to, even though it's Friday and it's usually low liquidity Friday, it's going to be interesting what happens to stocks. I feel like tomorrow is going to be like fall off a cliff for stocks. It really does. I don't know. I feel like we're going to fall off a cliff tomorrow. And so tune in tomorrow and hang in there. And if we did front run, then most of the, not most, but a lot of the downside is probably done for crypto. If we didn't front run, then we have entered unprecedented times. We're honestly in unprecedented times anyway. And we're going to have to just fucking navigate this shit ourselves. Thankfully, we're going to be able to do that. So I will be here tomorrow. I'll be here tomorrow. And we're going to just, I don't know, we're just going to trade through this shit. Honestly, we're just going to trade through it. Again, if you had cash, you had positions, I wouldn't be in like a rush to deploy at all. And don't listen to anyone telling you that FTX is worse than this. This is bad. I have seen it this bad before. It was FTX. Straight up. I have seen it. I have. FTX is worse than this. Anyone that says otherwise. Anyone that says otherwise is just lying. Outright lying or they weren't here. FTX was worse. I strongly disagree with the notion that crypto's over. Bitcoin is not dying in a silo. It's the greatest technology. It's the greatest financial technology ever created. Crypto is fundamentally going to change the finance industry forever. And we are sitting on the forefront, the bleeding edge of the two most formative technologies of our generation of the next 100 years, which is AI and crypto. And so if things have to pull back before they get better, they have to pull back before they get better. But there are going to be many fucking millionaires, billionaires made from this. And I promise you some of them will be in this chat. I promise you one of them will be me. And if you spend enough time with me as a default, like you kind of, so it's going to be someone from here. Before I go, I have this Telegram and I post dumbass shit in there. And do you want the link to my Telegram? I post dumbass shit in there. I troll. I kind of say a little bit of everything. But if you're interested in the link, this is the link, I guess, here, chill. Damn, chill. I'll throw it on YouTube too. YouTube, if you all want it, I got you. Do you want like a quick motivational speech before I go? Do you need it? I'm down to give it if you need it real quick before I go. Send it to YouTube as well. Do you need one or are y'all good? Seems like y'all good then. I'm good, he says. I'm good. First, bro said first tweet. First chat in here ever to say, homie, I'm good. I don't want it. Donald's new tweet. All right, look, here's what I'm going to say before I go. The last thing I'm going to say is, damn, y'all joining this fucking shit fast. The last thing I'm going to say before I leave is that Mando came on the stream yesterday and he said if you're a young person and you haven't made that much money, you should absolutely welcome cheap asset prices, because in our entire life we have never seen cheap assets. I started buying coins, started buying assets in 2020, and everything was already piss ripped off of stimmies, and it's basically been up only. And I basically never had any opportunity to buy cheap assets at any point in my life other than crypto, other than fucking pump fun, basically. And so look, I can't foresee the future. Nobody can foresee the future. I'm not God. I can't decide when price goes up or when price goes down. But at some point, price will go down significantly. And that point will not change. That you have an opportunity, you are gifted by God himself to sit at the forefront, the bleeding edge of the two most formative technologies that will probably ever be created, at least in our lifetime, at least in our generation, the intersection of AI and crypto. There will be many innovations and many millionaires made from the intersection of these two technologies. And if they haven't happened yet, which they haven't happened yet, especially not on the consumer side, there has been money made by AI, but it has not changed the world yet. At some point, it will. At some point, it will touch every single thing that you do. And at some point, and when that point comes, we are going to be on the bleeding edge of it. Because here's the deal. Most money, all of the money that you make, that we make, that I will make, the make it money, the 100M number that I'm talking about that we are going to hit, it's going to be made by existing in an asset class that is PVE, twapped up only over a 5 to 10 year time horizon. That hasn't happened in AI yet. It's happened in the private sector. That's what happened from 2019 to 2022 in crypto. It was PVE, twopped up only. All you had to do is sit and exist. Cal Lloyd, thank you for the gifted. And you would fucking make it as a default, okay? That bubble will happen again. We will identify that bubble. We will be in the front lines of that bubble because we sit here all day and we figure out what's happening, where it's happening, when it's happening. And when we see that bubble form again, if it's right now, us going higher, SPX to 8K, or if it comes in 2 years after everything's beaten and berated and destroyed, we will identify that bubble. We will rush in to throw gasoline on the fire and we will fucking reap the fruits of our labor, because at a certain time frame, you spend enough time in the markets, paying attention, locking in on what's happening, being at the forefront of speculative entertainment, and you have a mandate from heaven. You have a mandate from heaven to win on a long enough time frame. You sit on the forefront of enough innovations over enough time frame, and you're just going to win. Okay? The people that sat through 2002 and 2003 of markets getting absolutely berated on the .com crash showed up 2004, 2005, and they had no fucking clue what they were doing. They had no money, but all they did was click buy on Amazon stock, close their eyes, hold their breath, and they fucking won. They fucking won, and we're going to do the exact same thing, whether it's right now, whether it's tomorrow, whether it's next week, whether it's next month, whether it's next year, next decade. I'm going to stream Monday through Friday, 3:30 p.m. EST until I fucking feel like getting off, until I make it, which is 100M. And what they said is true, that you are the sum of the 5 people you spend most time with, and I promise you I'm going to make 100M, so you spend enough time with me, and you, as a default, are going to do it. Pop into my Telegram. Look, a couple things to be true. If you're feeling bad right now, there's a whole world outside. Close your screen, go outside, okay? It's never over unless you stop trading. I promise you it's never over unless you stop trading, unless you stop paying attention. I promise you, like, I actually mean this, not to be that guy, but the markets are bad. Some bad people, some good people did some bad things during FTX collapse. Never, ever, 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 ever kill yourself in GTA. Never do it. Never do it. Never do it. You can't win if you stop. It's the only way you can't win. It's the only way you can't win, man. And so look, vibes are low today. People feel weird. Everything's a little bit all over the place. But at the end of the day, chat, at the end of the day, we'll be here every single day on the bleeding edge, on the forefront of speculative entertainment. If there's something to speculate on, I'm fucking buying it. I'm selling it. I'm trading it. I'm paying attention to what's happening. I'm about to raid Rasmus right now. I'm sending you in there. Good luck. God bless. I'll see you tomorrow. Which is Twitch. Fuck, I fucked it up. Oh, it's not ready. Fuck. This is Twitch. Fuck. It would have been so smooth. Ah! All right, bye. Bye. Good luck. I'll see you tomorrow. Bye. Yeah.